Yeah, so first of all, perhaps I can orientate you guys to the location. So if you guys gonna network and chat about your project and stuff, feel free to have it at the outdoor networking event. And over here, we're gonna have I'll walk you through the agenda later. You guys are gonna have a very exciting time with many panels and the pitching event with the top VCs in the Web3 space. And if you are heading for the washrooms, you can head out that way, turn left. That is where the washrooms are. So yeah, and most importantly, I will walk through our sponsors as well later. Their booths are at the back. Feel free to check them out because this event wouldn't be possible with them. All right, so let me move on to the next slide. So before I begin, welcome you guys to this event specifically. We call it BIA Singapore. So what is BIA? BIA is BNB Incubation Alliance. So as a blockchain network, it is our job, right, to get a community together. So we think that by getting, all the VCs, Binance Labs, and all the esteemed invitees today to get together with projects and startups, it will truly build a community, right? Because it brings funds to projects that bring value to the users on our chain. So I'll walk you through what we're going to do this. Oh, sorry, and before that, just to highlight, this is a series of multiple events. We have done it firstly at EFCC at Brussels, and then at Nashville, Bitcoin 2024. This is the third one in Singapore, Token2049. We have upcoming to be confirmed, but maybe in Dubai and Thailand. So do keep a lookout on our socials. And yeah, let's go to the agenda. So yeah, welcome everybody today. And glad that you guys are able to join us with this BISG event. We will start off with a welcome speech later by Sarah, head of APAC BNB Chain. And then subsequently, we will have a keynote by Binance Labs from Nicola, investment director at Binance Labs. And yeah, after that, we will have a very interesting discussion, a VC panel that Gala will help to moderate. We will touch on the invitees later as we show on the slide, the screens. And right after that, gaming panel. We were going to talk about how Web3 gaming is advancing in this exciting space right now. And then Sarah will come on board to announce the rules another time because it's going to be a pitching event, right? So we're going to make clear the rules and the exciting main event will start at 2:45. The first pitch session will start. So if you are friends with any of the projects pitching, do get them to be here. Initially I said 30 minutes earlier, but I think an hour earlier because of the road closures because of F1 upcoming. So help to spread the information, get in early, and when the projects are here, please look for Lucas, my teammate. Raise your hand, yeah. So he will help coordinate the presentations. Do get to him, and yeah, and then we can kick off with a DeFi panel at the interval, and we will start a second pitch session at 4:45 p.m. And that's not all. So after everything, just to highlight, we have a networking party. This is for the community. So do check it out and do stay to them. And then we can have a lot more networking and, build up the space, have some talks together. All right. And yes, very importantly, like I mentioned, the booths behind. So this event is sponsored by D11 Labs, Lorenzo, Particle, Seraph, South, Y, and Exterior. So very interesting. You can see studios here, games here, infrastructure, memes, DeFi protocols, investors. I think it's a very good sign for an event like this where everyone from all parts of the ecosystem are here. So once again, thank you to our sponsors. And yeah, I'm going to hand it to Sarah, the head of APAC in BNB Chain. So Sarah, please. Yeah.
Hi guys, this is Sarah from BNB Chain. I'm the APAC lead of BNB Chain. Welcome all of you guys attending our event today. This is a really special incubation event that we are having with a lot of incubators, VCs, and group projects. So yeah, let me introduce about BNB Chain. I think everybody heard about us. It's a really old chain, but I don't think everybody know what is real composed by the BNB Chain under the infrastructure's perspective. So actually we have three really important tech stack under BNB Chain. One is BNB Smart Chain, which is a EVM compatible chain having a high TPS and no gas fees. And we have OP BNB, which is a layer 2 rollup solution building on top of BNB Smart Chain that's been launched on mainnet last year. And there is another one, coin BNB Greenfield, also launched by last year, which is a decentralized data storage network. So by combining those three important tech stack, that we say BNB Chain. So as I mentioned, BNB Smart Chain is a DeFi hub. So there is around like 5 billion assets being locked on BNB Chain, which is ranking around number 3 TV in terms of TVL compared with all other layer 1, layer 2 protocols. And also the BNB Smart Chain is second largest chain by DAU. We have around like 1 million DAU on BNB Smart Chain, combining with different protocols like DeFi, PancakeSwap, Venus, and also a lot of like gaming projects and stablecoin transfer happening on our layer 1 protocols. So also BNB Smart Chain is the governance chain of BNB chains. At the early of this year, we combined the original BNB governance chain to BNB Smart Chain. OPBNB is a layer 2, as I mentioned. It is dedicated for the high frequency dApps to build on top of. So the OPBNB TPS is around like 5K to 10K. It is allowing the large scale dApps to running on top of, and the gas fee on OPBNB is low to 0.004 US dollar per transactions. So there's already a lot of dApps running on top of OPBNB, including gaming, AI, DSOL, and perp DEX, etc. BNB Greenfield is a decentralized storage protocol. It is dedicated for hot, valuable data. But by having the Greenfield infrastructure being there, we can really build BNB infrastructure to be ready for in future DataFi or ContentFi on BNB chain ecosystems. So some really interesting and exciting numbers I need to highlight and sharing here. One is about the DAU. As I mentioned, there's over 1 million DAU on BNB Smart Chain, and there's 4 million DAU on OPBNB, which is the layer 2. So total, there's 5 million DAU on BNB Chain in total. DAU means daily active users. So I think that is also why a lot of developers is really choosing to building on top BNB Chain, because we do have a lot active users there. And the unique address, wallet addresses on BNB Smart Chain is a lot as well. The number is 461 million plus. So which means the wallet addresses holders will be your asset buyers or your real users of your dApps. So I think every project developer should leverage that features of us. And also OPBNB at the beginning of this year have reached a highest daily transactions, which is 71 million in a single day during the inscription hype. So we are really pushing hard to mass adoption. And recently we have been really pushing a lot on a really interesting narrative, which is stablecoin as well as payment. So there's gonna be a really exciting news being pushing out soon this week. So we will do a lot regarding the stablecoins as well as payment initiative in the futures to make BNB Chain to be a core stablecoin infrastructures. So we're offering gasless solutions called MegaFuel together with Node-REAL. And also we are unlock the gas fee or cover the gas fees for SEXas, wallets, bridges, and even DeFi protocols in the futures. So we wanted to offer a gasless solutions for users to really transfer their stablecoins on BNB Chain. And we will have more native stablecoins issued on BNB Chain soon as well. So this can be something really big and really exciting for us for the end of this year. So just stay tuned. There's a lot big news will be issued soon. So all in one, right? Our mission and vision is onboard the next billion users to BNB Chain ecosystem and to really support the real excellent developers in our ecosystem. So let me share more about what is BIA, because I think like everyone here today is for BIA P-Chain, right? So BIA is actually an incubation alliance program that we do it together with top VCs, accelerators, and developer communities. So we have invited around like 50 projects today to pitch in on behalf of their projects and in front of the top VCs and incubators today. So we have the winners of the BIA will be directly selected to MVP programs. MVP program is a BNB Chain Web3 accelerator program that we have done together with Binance Labs. We have done this like for a long time. Every year there is 2 to 3 rounds of MVP, and we have invested a lot of really good projects through MVP like Isina, Altlayer, etc. So the final winners of BIA will be directly selected to MVP programs. By the way, MVP program this session has just accepted for admission right now. So if you have project, you don't got a chance to do pitch today, you can still apply online through the open form to be considered for the next round admission of MVP programs. So all in all, the benefits of the BIA program is firstly, the winner was accepted to MVP as I mentioned. And then in the MVP, the good one will be finally invested by Binance Labs. And also we are offering builder grants to good projects. So if you are BIA attendees, builder grants of BNB Chain will also prioritize the consideration for your grant applications. And also we also offer the last solutions, which is a one-stop support for MVP projects, which covering like a lot of like infras or third-party services with a discount price. So a summary for the previous BIA event, we have already launched 2 rounds of BIA, one during ECC, one during Bitcoin in Nashville. So there is already 5 winners has been selected to MVP programs this round. So we have projects, winners, participants, and a lot of like judges from the top VCs for the previous 2 rounds. And for this round, I wanted to highlight every VC and alliance partner that already supported Singapore BIA event here. So they are ABCDE, ABGA, Animoca Brands, IDG, D11, Draken Ventures, DWF, Faculty, Framework, Gumi, Harvard Blockchain, Harshed, IOSG, LK Ventures, Amanaya, and MPCI, which is Matrix Partner China, Norma Capital, Pantera, Pencils, Polychain, S&D. So thank you all those alliance partners and contributors for BIA programs this round. So this time we have 50 projects which will get doing a pitching during SG event. Those are, I won't go in detail one by one, but we have the name and logo on the slides. So they will sharing in details about what they are doing later to us. So yeah, I think that's all about my intro. Feel free to connect to us, scan the QR code, follow us on Twitter, or just directly reach out later after the event. Again, thank you all for joining us today, and wish you have a good day together with us today. Thank you. Let's welcome Nicola from Binance Lab to give a keynote.
Hello. Hi, everyone. I'm Nicola from Binance Labs. So it's really an honor to join you guys and to be a judge here at this BIA event in Singapore. So at Binance Labs, we started investing and incubating in the area in the year of 2018. We have been here like forever. And regardless of the cycles, bullish or bearish, we are always here. and standing by and supporting the builders here. So we as a mega fund, we're pretty much chain agnostic and sector agnostic. Basically, we have been deploying our money over 300 portfolios and in quite varying sectors. In these days, we still are looking actively at sectors which I believe many other VCs are not like quite supportive these days. We're still out of the investment direct venture investment trench. We deploy around like 200 portfolios, and we also support around 100 through our incubation camp. So in terms of the incubation, as we have a very slim team supporting super early stage projects, we do have different like alliances. As a close ecosystem partner of BNB Chain, we are also one of the VC support for the BIA event. Like previously, we have been running the MVP seasons for several years and for 7 seasons. We have supported projects like ArtLayer, like Space ID, like Lorenzo, like Polyhedra, and we have been helping and supporting these founders since they launched. And these founders have given us very impressive track records in terms of how they build the product market fit and how they go to the market. So many people have been asking us how would Binance Labs evaluate projects, and in terms of what kind of projects we want to invest. I don't think there's standard answer to it because the market has condition has always been changing. The Bitcoin prices and the market sentiment and the market sentiment towards VCs, everything is quite fluid. But what we say here and stand by, what hasn't changed is that we always number one rule is that we always support the long-termism builders who has been who, no matter they have been in the industry for a while or they are new to the industry, but they have the long-term vision, even though let's say even after they launch a token or whatever, they still are building here and they have been quite persistent on finding the product market fit, and also always passionate and ready to learn new things. So number one rules is always a team. So that's why we are very happy to join the BI event to have a very close-knit interview with the projects team, with the founders, to get to know the team better before we make the trigger of our incubation or investment decision. And the second thing is that we always think that the product comes first. If there's no product market fit, if it's just another earning or another yield farming project, that might not be our top priority. But we are looking for those products that has a real demand, no matter to retails or to institutions that have a real business model or real yields that is coming out from the real demand. We would likely to have been more supportive. And the third part is that how the team has their capability in terms of the go-to-market and the marketing thing. I know many team here are probably super early stage, quite nascent in the go-to-market and everything. But this is what I think labs and other incubation VC alliances as very experienced investor and incubator in the area can be of help for us. So in no matter of the MVP previous season or our incubation camp, we have been providing supports like the tokenomics design, what vesting schedule makes the best sense, and how do you design the no matter single token model or dual token model in the overall economics design. And we also help to connect with you with our overall Binance Labs portfolio. The 300 of them, many of them has been quite successful in the area to connect with you with the builders that has the most insights into the go-to-market strategy. So these are probably 3 areas that we look at when we are talking to the founders and trying to evaluate the project. And I think as over the years, we have been not only looking at those quite mature stage projects that has been already sufficiently backed by VCs. These days we have felt the overall sentiment probably to VC, including Binance Labs, are not that positive from the retail market. But what we have been holding faith is that we still believe that as a VC that has been in the area for a long time and has always supporting the long-term visions that still building a real product and a real product market fit is what is a gist towards the success. And also one last note is that so in labs here, we also do have wide range of channels to trying to reach out to more projects. So here we have been supporting the BIA as an alliance partner. In Singapore, we have been also been on the stage, Brussels and in other areas, and futurely probably in Thailand and other areas to also as one of the incubator and judge here. So always feel free to reach out to me or any of my colleagues if you have any interesting fundraising proposal, no matter which area you are building in and which chain you are looking to build on. We can always be of help if you think that you might find Binance Labs helpful. So that's all from my side. Yeah, it's really great to meet you guys.
All right. Round of applause for Nicola and Sarah earlier. So I think it's very interesting where we do agree where product is very important. So at BNB Chain, I just want to highlight for this event, right? So if you see anyone with the BNB Chain shirt, unless it's free swag from us, but most of us should be people from BNB Chain. Feel free to reach out from business development and marketing so we can, discuss and learn more about your projects and what you do in the Web3 space. So yeah, let's give it some time for the stage to set up, and then we will move on to our next program. So the next program, I think is a very important one. So please do stay to hear it out. If you're networking, feel free to do it outside. And yeah, I will introduce our next moderator for the program, the VC Venture Capitalist panel. The moderator would be Gala, our Ecosystems Director at BNB Chain. Please give her a round of applause, please. Thank you. Okay. All right. I will help to introduce all the panelists as well. So we have Gala, the Director of Ecosystem in Development, BNB Chain. And can we welcome Big Kim, General Partner at Hash, please? Yeah. Yep. Thank you. Please give our panelists a round of applause. Thank you. Yeah. I'll come up from here. And yeah, Hasib, Managing Director at Dragonfly. Luke, General Partner at Polychain. And Nicola, Investment Director at Binance Labs. Yep. Yeah, careful, watch your step. All right, with this, I'll hand it over to Gala. Gala.
拍一下视频。
视频好。OK。
Good afternoon, everyone. I'm very excited now, and I believe you met everyone here. Hasib, Managing Director of Dragonfly, and Bakim, General Partner from Hash, and Swing, Research Partner from Polychain, and our beloved Nicola, from the Investment Director of Binance Labs. And my name is Gala Wen, your friend at BNB Chain. And so today's topic is actually very, very exciting, especially we have you guys here, right? It's VCs. Do you still have a role in future of crypto? And so I'm really gonna throw like a tough questions for you guys. Ready? Good, good. So, well, if you think about like today's crypto and like an investment environment, right? Especially this cycle, like founders, they love KOL rounds because KOL bring like a direct marketing and sometimes even trading volume. And they, so they also, founders also like other founders, angel check, right? Because these founders, they have direct building experience, resources, fame, and brand recognition. But like in terms of the VCs, when it comes to VCs, when you bring like a large check sizing, that creates like the whole entire high FDV, low liquidity issue, which right even centralized exchanges are seeking for solution now. I mean, what do you think about like right your future role, and has this affected your investment decision?
All right, I will take a first shot at answering this question of what is the future of VC coins in crypto. So I'm going to first just name a few VC coins that people have probably heard of. One of them is called Solana. Another one is called Polkadot, Near. Actually, it turns out, funny enough, there's a project called Ethereum that was funded by a VC fund called Fambusher. VC funding in crypto is very, very old. Goes back a very, very long way, because the reality is that it's tough to build technology without getting funded upfront by people who are willing to take the risk on a new idea coming to light. Now, the problem of there being correctly priced assets on secondary markets is a real problem. It's a problem that everybody's dealing with. VCs, exchanges, founders are all trying to figure out what is the right price for a lot of these new layer 1s, layer 2s, applications that are launching. But the answer usually gets solved by markets. It doesn't get solved necessarily by market structure. If you look at the FTVs or the amount of float that was normal at the time when the last generation of L1s were launching, if you look at things like Solana, Near, Avalanche, things like that, they also launched with about, call it 8 to 12% float at launch, which is about the same thing that we're seeing in the current cycle. Actually, that is not really what has changed. What may have changed is, one, the retail appetite for all these tokens and the total amount of narrative rotation that's happening with tokens. And third, the fact that alts across the board have gotten a lot weaker over the course of this year. I think the story of, is it about KOLs versus VCs? Not really. It's, again, KOLs have always been a part of the crypto investing culture. Back in the the ICO boom days, KOLs were a big deal. In 2020, KOLs were a big deal. They continue to be a big deal. But VCs do a very important thing that is different than just being famous and tweeting about your project and convincing people to buy your token. It's helping you go from 0 to 1. And the people who can best do that are people who have done it before and who understand how a project actually develops something new that nobody else understands or believes in. So I think VC is not going anywhere, but I'm biased. I'm a VC.
Yeah, on our view, we've been investing in the space for about 8 years now, and our role as a fund has been also evolving as the market changed. As Hashim mentioned, there were a lot of VCs that funded early layer 1s and the infrastructure projects. But also, as Garola mentioned, a lot of the KOLs or even angel investors, that's how crypto started. Hash ourselves started as a kind of like a Korean KOL in the beginning, making small checks into earliest projects on Ethereum ecosystem, and we grew big over time. But not to say that just getting into early and being early investor, influential or famous is a role that will stick around. And the way that we've been evolving is that, for example, as Hashim mentioned, the market has changed so far, regulation has changed so far. The new market that projects are expanding onto beyond just East Asia, South Asia, or US, it's becoming more diversified. So, when you're a founder and looking for help on strategic growth of your protocol or equity company, you can strategically position what kind of a platform you're looking for to augment your current strategy and also fill in the gaps you might have. And I think the role of VC will become more important as we go and become more complicated, in that you have certain reliable partner for a certain specific role or specific purpose that you can work together for the longer term. Whereas, unfortunately, if we had a lot of the angels or KOLs that are in a smaller check size, it's easier for them to, liquidate or exit or be not responsible about putting their name on the project. But VCs, the name we put on the project go forever. We still get asked about portfolio we invested in 2017, 18, and that's our accountability and responsibility to continue to work with them and continue to, share the brand that, we support in a sustainable way for the ecosystem and the supporters to be around together with the funds.
Yeah, so I think both great points. And one of the main things about VCs is obviously they provide capital. And this is something that I guess founders and also angel investing can't get to be able to get the 0 to 1 at the same level, especially when these projects need this capital expenditure to, basically build out the teams, build out everything. And then the second point around that is also kind of piggybacking of what Haig said, is that the role of a VC is also can be done, I guess, in very short-term space by a builder who has, experience in a specific vertical. But when it comes to VC, we have almost 8 years of experience and more of a quantitative look instead of a qualitative look at the space. And this type of advice, I think, is still very relevant and will be able to be relevant going forward. And even if we take a step back outside of crypto, when we look at the role of VCs in any sort of startup, we see that from success stories, I think there's only 2% of basically unicorn companies in the traditional venture world have bootstrapped themselves to become a unicorn. So I think VC will have its space, and there definitely will be space for KOLs and also builders, and they will all fit in together to carry on building these companies from 0 to 1.
Yeah, first of all, thank you for the spicy question. And the answer for me is yes, definitely. Not only I hope, but I do think we see, and especially evergreen capital is going to play a more important role in the future. So I do know that in the meme season this year, that the overall, especially retail market, has a quite controversial attitude towards VCs. And it seems that with all these meme coins launched, the VCs didn't take any participation in it. But the thing here is that if you're really building something, you do need capital, and you do need experienced investors instead of green hand investors to provide all the support along the way. So we do think that VC plays a role, like in the fundamental speaking, but let's separate the emotions, the market emotions with the facts. That we do understand that the emotions are quite bad sometimes for VCs, but when the overall sentiments are towards let's say some meme coins that don't need a product, I think there might be a turning point that the market is crying for more long-term infrastructure or real users applications. But the key point is that in the previous circles, the capital, the market is too quick, and the capital doesn't really have the patience to keep supporting after the TGE. So usually the VCs play the very important role before the TGE, but after the TGE, sometimes the support is not enough. So we, as Binance Labs, the one thing that we particularly want to emphasize is that we have a very, very not aggressive exit strategy. So even after the token launch, we still provide the support and the capital there to be a long-term supporter of these projects. And in the traditional capital market, we do see there are many evergreen pension fund or whatever to support the projects to long-term growth. And because that's the fundamental of this business, they are generating the revenue. to support the market cap of all these companies. And I do think with the VC money and the positive loop being VC money coming in to support the real valuable products, and these products keep finding the real market demands and the real revenue, and then even after the TGE and the first round of getting the users and the market attention, they still can generate evergreen revenue so that VCs and capital can long-term support. So in this positive loop, we do think that VC can play not only important role before the launch, but also a longer term and more important role in the future. But there might be a turning point, and I'm looking forward to it in the near future.
Thank you. Well, say as the recent as a recent hit, right, with this high FDV low liquidity token. I mean, are you guys still able to generating a meaningful profit this cycle? And if you're not, is there any investment approach change because of this?
I mean, look, when you get a vintage of investments that don't do well, there is one answer to what happens next, which is that prices come down. And what you see is that seed rounds are happening at more rational prices, Series A's are happening at more rational prices, Series B's are happening at more rational prices, and you see the same thing happening at the exchange, which is basically the equivalent of this sort of IPO for a token, is that the exchanges are also demanding, hey, when we launch these things at too high valuations, they drift down and retail gets hurt, right? So that price signal propagates its way back up the capital stack to the earlier stage investors who incorporate those signals. So what you've seen is that usually there's a little bit of a lag between the public markets and the private markets, but in crypto it's faster than in most public markets because of the fact that crypto just moves fast, and tokens, they can go from 6 to 9 months from an initial round to eventually launching a token. So I think actually the answer is that the way that's getting fixed is by valuations coming down across the board, so that these FDVs that come out on the exchanges are much more rational than where they were 6 months ago.
For us, we've been always focusing on pre-seed, seed, and A, early stage rounds, so that we don't have to care too much about the later stage, low fraud, low liquidity situation as an early investor. But generally, I think in this situation, as Hashim mentioned, the private market follows the public market. But in crypto, it goes up faster, but coming down to actually adjust to the public market has been slower every cycle. And I think this cycle right now is a bit of an awkward kind of a market situation. And we see private round valuation in terms of everywhere. So it's been really up to, I think, the lack of fundamental comparison of price comparison of FDB private rounds, and a lot of founders price themselves based on previous fundraisers, which I think continues this kind of a lag on the valuation for some of the later projects that come when even the market is not doing so well. So I think it really depends on how careful the VCs are in giving that valuation, and giving basically the signal or the number to the market, where the funds are allocating, and as you said, where the public market will be in terms of expectation that retail come from those valuations.
Yeah. So when it comes to when it comes to venture, it's also a lot about time horizons and a lot of market dynamics, and especially the cycle can almost be a lot shorter than what we see in terms of a venture investment, long-term, I guess, profitability. And these cycles obviously come in waves, and we try and, I guess, from the venture side, it's not so much as trying to evaluate the market timing, so much as trying to build out something that will have, I guess, a long-term success. And at Polychain, we have kind of the benefit of having both a liquid fund as well as the venture fund, and that has a pretty interesting dynamic between the two. And also, it allows for this ability to see how the market reacts, see how the market dynamic goes, but I guess the long-term strategy is always going to be focusing on getting good quality deals and allowing the market itself to recover.
I would like to say we're okay in terms of the thesis and the continuity of our investment thesis. Because I think in labs, one thing first is that we do have a valuation discipline over the years, because we cannot time the market and we cannot expect the dumb money will get to accept the sometimes crazy valuation. And we also want to have that mission to protect the retail users. So one thing first is that in labs we always have sort of the valuation discipline to always evaluate the project value based on the fundamentals instead of just the hype and the narrative and how much other like how other VCs give the pricing. And the second thing first is that we have tend to invest in early stage projects compared to those late stage right before the TGE or even after the TGE. Like most of our very successful alpha projects coming out of our early stage when they don't have the hype there, like Outlier, we invested together with Polychain and like Ethena and Bouncebit. These have proven to be very successful, and we made a trigger in early stage where we can help with our own networks and our own advisors to also help us to play an important role in these projects. And so I do think that these cycles, the overall performance for like, let's say, the VC-backed coins can somehow affect like the performance of the funds. But if we are still staying long-term, betting new projects, betting like early stage projects that really are building in the area and have the mission to sort of like protect the retail users and do the correction when the market goes wrong, we are pretty confident that we will still be staying in the area and still be in a like healthy growth. Thank you.
Cool. And so like we all know, right, crypto evolve their narratives very fast. So what's your favorite narrative now? And what is your favorite portfolio company now?
Why don't we go in reverse order this time? Why don't you start?
I got asked by this question a lot. What do Binance Labs like most? But my question is that I never have any favorite narrative because I cannot time anything and I don't chase the market topic. So
what's your least favorite narrative?
My least favorite, probably just yield farming thing. Yield farming, all sorts of yield farming, either DeFi apps. If it's just yield farming with no real like real money, real revenue, I don't like it. It can be in different forms though.
And then your favorite portco?
Favorite protocol? So we do have many investments in this year. A few things, I already named a few I like Outlier, Ethena, and recently one of our back portfolio, Kaizen, got launched. These are the projects that we're back in early stage, and they do catch the trend when the market is there. Like the cat started building on town when no one cares about it. So we do like these kind of projects who are not on the market trend, but after a while, we are proven to be right.
I think one of the biggest narratives at the moment, which is potentially my favorite personally, is the crypto and AI convergence. I think it is the combination of two of the largest technology innovations in the last 10 to 15 years. And I think that it is also maybe one of the biggest and more overhyped narratives, but there is, it is an area that both AI and crypto can benefit incredibly well from some of the technologies that they can't individually provide themselves. And diving deeply into this area, I think, is very exciting. Very exciting.
Yeah, I think I guess my most excited thesis right now is around anime. Broadly, I guess content, IP space. The reason here is that Hash started as an investment firm to invest in acceleration of adoption of crypto. And after 8 years, it saddens me that there's not that many new experiences that I can gain from crypto or new contents that I can consume from crypto. And I think that's why the crypto social narrative hasn't really taken off at all, because there's no accumulation of content that's happening in crypto at all. It just goes all back to financialization, liquidity, and speculation. So the only content we have in crypto today is still the price. People pay attention to price, love watching it going up. And that's why the most value capture, or stable businesses are like exchanges, or the ones that execute the economic action you can do on those content, which is buying or trading or putting leverage on it. So can we move beyond that is, I think, the question of whether we can accumulate healthy, sustainable, or fun contents on blockchain ecosystem for people to enjoy beyond speculation, so that you can stay around, engage, and apps can also retain the users on different types of usage rather than just the price point of attention. So on that, I expect anime industry to go beyond Hollywood in the next 10 years. It's already at the peak of the commercial value in the history of anime. So we've been investing and incubating in a lot of projects, both that have token, not have token, to push bringing those content to on-chain, but also create new ways of producing new IP content, celebrities, or animes, so that people can enjoy. And this is very important for us because as a fund, we invest about 65% in Asia and about the rest in 35% in US. And in Asia, many of the actual social points, engagement points, and financial commercial product are around these kind of IPs and consumer apps and content platforms. And I hope to see within our portfolio in the next 5 years that we can provide that to the market so that people can enjoy those beyond thinking about DeFi or speculation on blockchain.
What do you think?
So I hate narrative investing. I think in a way, investing in a narrative is allowing the market to do your thinking for you. And it's very clear that the best investments in history did not obey a narrative. So if you look at Solana, if you look at the Solana seed round, which I passed on, it was a 4-cent round. And the Solana seed round did not fit into any narrative. It was this, they were going to rebuild a tech stack from the ground up that was not going to be EVM compatible. It was this whole new convoluted thing they were building from scratch. And everybody thought, wow, this is a stupid idea. There's no way this is going to work. The Uniswap Series A, that was early 2020, before DeFi took off, before things got really popular. And the Uniswap Series A, Uniswap was trading like tens of millions of dollars a day. It was like, today it would be like number 60 on DeFi Llama. It was like a nothing, the amount of volume that Uniswap was trading. There was no narrative around DeFi at that time. Like almost all the really great investments in crypto did not belong to a narrative. When we invested in the seed round of Athena, it was 2 months after Terra collapsed that we invested in the seed round of Athena. Nobody wanted to invest in stablecoins. Nobody wanted to invest in DeFi. Everybody thought all this stuff was bullshit. And I think the lesson from all of that is that as an investor, you have to think for yourself. When a deal comes in front of you, whether it's a Bitcoin L2 or a crypto AI project or whatever, it's always a question of this founder at this time with this idea, with this price. Yes or no? Saying that, like, well, this narrative is hot, it's going to do well. Almost always the investors who outsource their thinking to a narrative don't end up succeeding. That's my answer.
Wow, I'm amazed. So one last question. We are running out of time here. So I want to ask you about the BNB Chain ecosystem. Say, like, if BNB Chain wants to establish the builder DAO in the US or in Western world, right? Like, how do you think? Like, what do you want? Like, what do you want to see us to have, right? So if we want to incubate our projects, and like how can we bring you in? What would attract you to be part of this?
So the number one thing that I think really defines a great ecosystem is, one, having a great identity, a very unique identity, not trying to be like other ecosystems. Two is being very, very developer friendly. And three is being opinionated. And I think the biggest mistake I see from a lot of ecosystems is that they try to be everything to everyone. They try to say yes to every possible application, every possible use case. But the applications or the new chains that really started to work, they found an identity and they stuck to it. So Solana is like, yeah, we love meme coins, we love super high throughput DeFi, and we love DePIN. And they don't try to bend over for every single individual little weird thing that finds its way into Solana. Arbitrum found a really great identity around DeFi. Blast found a really strong identity around gambling and being a degen. And so I think that is what I generally look for in a layer one that manages to really attract a unique set of builders and applications.
Ricky?
Yeah, I guess for BNB onwards, moving beyond the branding on exchange-related protocol, I think it would be very important to associate with the founders, because so far I think the BNB has made a lot of splash and onboarded a lot of ecosystem, especially in Southeast Asia and Asia. But going beyond that, going from 1 to 100 would be really dependent on who's inside the BNB ecosystem. Take out the Binance and who are here, who's building here, and why are they building here? And then are there, collaborative ecosystem here for us to build together beyond this, so that it becomes its own, animal of a layer one ecosystem that, founders themselves attract each other rather than foundation or the exchange, promoting. I think that really will become the next phase of BNB Chain to grow, significantly globally, and it creates actual network effect that the good founders bring good founders, good retail bring good retail, good users bring good users. So I think that building that positive feedback loop is the hardest thing for any layer one. But BNB Chain had a great, strong start and great momentum. So can you keep that going in a more autonomous manner? It would be a big question for the ecosystem.
Yeah, building on top of both of those is like to actually foster this community of both builders and retail within the ecosystem would be a lot of focus on creating this ecosystem that is both positive but also easy enough for developers to first learn about. So focusing on something like education on the retail side and the developer side, but then also fostering some sort of ability for these developers, if they are already on other ecosystems, for them to find their identity on BNB, as well as have as seamless of an experience making the transition.
Nicola?
So really great points. One last thing from me is that just be brave to take the lead and don't follow. If you're building like some just trying to build a BNB version for another like major narrative on another chain, I don't think probably it's the right timing, because basically there's already consensus and there's not much high upside. So we always encourage the innovation, and I've seen many interesting projects taking off on BNB Chain because they are building the one that that really has a product market fit on BNB Chain. Let's say CDFi protocol, let's say SocialFi, because they have a mass user base. So just try to find the product market fit on the right chain, and be brave to take the lead. Don't follow.
Well, thank you so much for these wonderful opinions and ideas. Well, I guess that concludes our today's panel, and I will pass the. Oh yeah, like we need to take a picture together, but I don't have my cell phone with me. Please, yeah, but we have our photographer here. Thank you.
Thank you.
Thank you, everybody.
All right, thank you, Gala, Bekim, Hasim, Luke, and Nicola. All right, I'm back. very valuable insights. So I hope everyone has great points. I mean, these are great VCs, so do write down notes on how the ecosystem is running. So just a gentle reminder that the outdoors area is part of this event as well. So if you would like to network or have conversations and meeting, feel free to have it outside. And then next up is our gaming panel. So if you're interested, feel free to have a seat here. And yeah, I will welcome myself. I'll be moderating the gaming panel, as I think people who knows me know that I'm a gamer. So love it. So I'm from business development that focuses on gaming at BNB Chain. And I would like to introduce our guest. So first up, Ethan, head of DevRel at Particle Network. Ethan, please. Please give a round of applause for our panels. Ethan, thank you. And Michael, founder and CEO of Exterior. Ruben, CMO of Seraph. And lastly, but not least, Sky Wee, Binance KOL. All right, thanks for being here. Have a seat, guys. Oh. Yeah. All right. Nice to meet everyone. It is great to have so many people from. Sorry. I heard something. Anyway, yeah, I wanted to highlight the interesting part of this panel is that the gaming ecosystem is huge, the Web3 ecosystem is huge, and gaming is just not about games. So today we have like people and projects from various parts of gaming. We have I'll just briefly introduce, but you guys can go more in depth into your projects. Like we have studios, we have game itself, KOLs, and infrastructure. So without further ado, maybe they can introduce themselves and the project further, and then we will go into the questions about Web3 gaming and infrastructure. So yeah, maybe you can start with Ethan.
Yeah, so my name is Ethan, although I go by the alias Tabasco. I lead developer relations at Particle Network. And with Particle Network, the kind of easiest way to understand what we do is that we do a lot of user experience related technologies. So we basically make it easier for users to get into Web3 and use applications like games particularly, without necessarily needing to know about a lot of the complexities typically attached with Web3. So for example, we're most well known, especially within the BNB Chain ecosystem, for social logins, being able to onboard to games or any application using your Google account or your Twitter account or your email, etc. And most recently, we've been really focused on this concept of chain abstraction. So the ability to basically, use applications with funds sourced from many chains. So I can have 15 USDC on BNB, on Arbitrum, and on Ethereum, and use it as if it's all on one chain. So basically, we do a lot of technologies that make it easy for users to use Web3 as if it were almost like Web2.
Thank you so much. Thank you, Ethan. Yeah, Michael, please.
Hi, my name is Michael, and I'm the CEO of Exterior. Exterior is a Web3 company, the publishing game Web3 company. On top, we have our own roll-up on BNB, and at the same time, we publish our own games and also other people's games, third-party games. We have a marketplace, we have a launchpad. Over the last year that we have been selling NFTs over on our launchpad for a lot of games with around 5,000 to 6,000 ETH. And at the same time, we are launching our own games. We have been developing 4 games right now. A new game just launched last week and is run on our L2 of BNB. And we've been partnering with BNB and a lot of things as well, including the BIA and so on and so forth.
Thank you, Michael. Thank you, Michael. Ruben from Seraph, please.
Yeah, sure. My name is Ruben. I'm the CMO at Seraph. We're an ARPG Web3-based loot game built by Seraph Studios. Maybe you know us from Legends of Mir back in the days. Yeah, and we're from Actos Soft, so we're a Korean-listed company by Kosdaq.
Thank you, Ruben. All right, Sky, please.
Oh, hello. Hey guys, Sky here. Nice. Thank you guys for coming too. Yeah, so basically I'm a Binance KOL too. So I'm actually a crypto and gaming KOL as well. So I also run Sky Ventures. So we do a lot of investment and incubation as well. And then aside from that, I mean, a bit background about myself. I'm actually, before in the crypto space, I'm actually a lot on the lifestyle and gaming influencer. So I got into the space because of Binance. So I'm actually working very closely with Binance as well. So I help Binance a lot on the strategic partnership side as well. So of course, I mean, definitely there's a lot of synergies that we can work together as well. Yeah.
Thanks a lot. Thank you, everyone. So yeah, let's kick into the questions in Web3 gaming. So since we have like different aspects of the ecosystem here today, let's talk about the macro side of things about user adoption. So how can projects or game studios infrastructure do like user acquisition in the Web3 space, like in maybe if you foresee in the next 3 to 5 years, how do you see the advancements and innovation can help? So maybe we can start off down the road. Ethan, please.
Yeah, I think user acquisition in Web3 is really difficult right now for a lot of reasons. Of course, like the first just being that onboarding UX in Web3 is distinctly different from Web2. And so if you want to get users into Web3 applications, we need to teach them how to use a wallet. We need to teach them how to manage a seed phrase. We need to teach them how to do transactions. I mean, there's just an insane amount of barrier to entry to using Web3 if you are somebody that comes from Web2. And so as a result, user acquisition in Web3 is incredibly difficult compared to Web2, which is an environment that people are already familiar with. And so I think what we're going to see, especially over the next 3 to 4 years, and that's already materializing, of course, is that users are going to find it much easier to get Web3. Ideally, the future that I really want to see is that, and I think that we're moving towards, is that Web3 will feel equivalent in UX to Web2. And so getting into a Web3 game or any experience Web3 will feel almost the exact same as what you're already used to in Web2. You log in with some typical account, you do interactions, you don't even know that you're doing transactions. This is the type of UX that we need to have real high impact user acquisition. Otherwise, the barrier required for these users is too great, and it's the overhead for onboarding them is significant. And so in my opinion, of course, I'm a little bit biased coming from an infrastructure provider that is specifically solving for this problem, but I think that the next 3 to 5 years is going to specifically bring us significant advancements in user experience. I think also, to some degree, I think a lot of games most recently have been focusing more on I guess has been less user-centric than they could be. I think that we could be building better, more innovative experiences. And I actually think that with things like chain abstraction and other innovations, the market is moving in a direction that really rewards truly user-facing, consumer-ready experiences, where actually the most revenue that protocols can make are if they produce really good user-first applications and experiences. And I think that we're going to see a combination of user experience benefits from infrastructure alongside market changes that will prioritize applications that basically optimized for UX. And so I think that this combined is going to create an ecosystem that is far more Web2 friendly than it is today, which I think we're not even close to that at the moment. And as a result, user acquisition is quite difficult.
Yeah, thank you for sharing. Like, truly agreed. Like, even established entities like Sony, right? They try to push PlayStation Network to like Helldiver games. They face backlash. Like, as a gamer, user first for infrastructure, I think definitely is the keyword. Thanks a lot for sharing. So yeah, Michael, would you share your view, please?
Yeah, I think it's from many angles. One angle is, I mean, of course, the ownership narrative have been around for years, right? And we're seeing that acquisition of users from the very first point, they buy NFT or they buy Genesis NFT and then become a part of the gamer, become part of a hardcore fans, right? And they also spend money in the game. That's one way of doing it. And this way has been questioned by many people because some people would say that when they buy the NFT, they are coming for financial return, they're coming for speculations. But as far as we see in our games, that some of the users who bought NFT before and join the game and then start playing the game, they don't just come to farm, they also start paying and to be really engaged into the game itself. So that's one of the things that is actually happening. And secondly, of course, I think ownership is the main point of acquiring users in Web3. Ownership, there's one thing that has been always done for a long time in gaming is mod, and also in gaming there is UGC. So all the user-generated content that we see in all the Web2 games, those who creators actually don't own it. It's actually still owned by that game company and so on and so forth. But all this hard work can actually be owned by the creators in Web3. And so they are highly taxed in Roblox, in Minecraft. They can be taxed whatever way they want it to be. But in Web3, you become like a real ownership because of decentralization. I think in the future is going to be possible. And then on top of that, that is AI, right? Because with AI, that all these user-generated contents can be done by, it used to be for the mods. All these mods are done by like hackers or like geek or so on. They're like programmers. But in the future, with the coming of AI, then we can see that a lot of this user-generated content can be made by general like users or players, and then the things that they created will be actually owned by them and can be traded in the future as well. And then thirdly, I think is also what is attractive to the users is community, because that is also one thing that we are working closely with, because actually even in Web2 game, a lot of the games, you see that some people can be farmers, some people craft their weapons and sell it to other players, even in Web2 games, in a lot of MMORPGs. But then all these weapons are not owned by the players. It's actually owned by the company. But again, in the Web3 world, that this will be owned by those who actually craft the weapons. So I would say the three keywords is still like financial incentive, ownership, and community.
Thank you, Michael. I would like to really enhance the point on ownership, because I think there are some talks about developers, right? They earn through selling their products. So they ask why NFT, why the secondary market? But I think what is underestimated is the creators economy you mentioned. Like if creators can create their assets and then they sell the secondary market as well. So this does not, it's not the studio's resources creating that, and they can share revenue on that. So this is actually very strong, where studios and creators can create assets in the game, and the economy can, I think, is really an exponential growth from there. A good example will be Pokemon cards, right? People trade Pokemon cards. If that is not profitable, then Pokemon will not be earning from the new expansion series. That is not true. So I really like the point. Personally, I believe that as well. So thank you for sharing, Michael. Yeah, next up, Ruben, excited to hear from you.
Yeah, sure. So what I'm thinking is basically that there's a lot of different things and different angles you can have a view from, right? So when it comes to Web2 gaming, Web3 gaming, how to adopt it, what's the near future for this, how do we see this in the next 3 to 5 years, is basically that we need to make it as simple as possible for the current Web3 gamers or Web2 gamers to move over to Web3. But for them, it could be like, how do you say this, a knowledge barrier for actually adopting or learning about how do I use crypto within the game? How can I eventually then, as a gaming company, let the users own their items, for instance, let's say, because we're building a loot-based game, right? So in the end, what we want to have is that all the users, and which they have, is that they use the items, they can sell the items, they can have their own kind of, how do you say this, value behind anything. In regards to like what we have right now is like a Web2 company, let's say Escape from Tarkov, which basically decides what's happening with the values of the different items. What I see also is that we currently have a migration from early stage Web2 games that are happening like back in the days, like when you talk about 2005, 2010. They're pretty simple games, straightforward. That's what I see right now in crypto as well. So it's gradually moving over. So what I expect in the near future is to have a lot of different companies that are having like background experiences in Web2 gaming. They're building towards Web3. They're having massive funding, so it can even be better developed than what we see right now. Yes, click-to-earn games are there, tap games and whatever, but I think the future will definitely be something like where you see like high-end FPS games coming towards blockchain. And yeah, I think that's going to happen in the next 3 to 5 years.
Thank you so much, Ruben. Yeah, to add, we do see this kind of growth on BNB Chain. Like 2 to 3 years back, we have a very close set type of games, but right now, the genres diversify, including having Seraph RPGs on board and exteriors like Age of Dinos on board. So I do think the genre will expand even more, and soon Web2 and Web3 gaming, we will blur the gaps, right? Like gaming will just be gaming, and Web3 enhances the experience. Thank you for sharing. So yeah, next up, Sky, could you share your view, please?
Yeah, so I'll share more into the KOL and also the gamer perspective as well. I think for a lot of Web3 games, they actually don't really focus a lot on the gaming side as well. I mean, that means they do a lot of play to earn. So a lot of like play to earn projects actually died off because they don't really build what the gamers want. So I think a lot of Web2 diverting to Web3, those game studio, I mean, they are more proficient. And of course, in the next 3 to 5 years, I've seen a lot of like Web2 gaming publisher and also like a lot of Web2 gaming studio are entering into the Web3 market. So definitely there's huge potential market as well. And I feel a lot of gaming studios should start to work with a lot of different like Web2 gamers as well, Web2 gaming influencers as well, because I seen how Web2 games like Pokemon. I work with a lot of different big giants games as well, like Pokemon, PUBG, Mobile Legends, invested by Binance as well. So I help them a lot on the like Asian side as well, on the growth side, especially Southeast Asia. So I've seen how they build up and how they capture the mass market as well, adoption, by working with a lot of KOLs, especially on the gaming side as well. So I feel that a lot of like Web3 games, they should really focus a lot on like working with a lot of different KOLs as well. And aside from that, they focus a lot more into getting the real gamers as well on the Web2 side as well. So from there, you can get a lot of user adoption towards the Web2 into Web3. Yeah.
Thank you, Sky, for sharing. Yeah, I would like to add, as a gamer, I think the KOL ecosystem attached to this whole ecosystem is very important, because for Web2 it's the same, right? I see IGN's review and then I'll check out a KOL playing the game, and then that's where I download and buy the game. So thank you for sharing. I think it's very important. So we'll move on to our next question, which is about, Web3 is still at very early stage, so adoption is always a question. So regarding how gaming and infrastructure, what are the obstacles that has been like stopping us from mass adoption, and what innovations and what your projects can do to really help overcome the obstacles? So yeah, Ethan, back to you.
Yeah, this is a question that we think a lot about, and really this question has driven a big part of like what we actually build at Particle and what we want to solve with an ecosystem, which is, why haven't we yet had 1 billion users or some significant number of consumer adoption? I don't really like the term 1 billion users, but like at least 100 million users, where are they? I think that, of course, what I mentioned earlier, just the disparity between Web2 and Web3 UX is enough to the point where onboarding any real numbers of consumers is completely impractical. I think the other thing is that Web3 has yet to have its ChatGPT moment or its light bulb moment for consumers. I think that hopefully there's going to be a point in time in the near future, maybe it's one of the projects that are here, where consumers, they experience something in Web3 and they experience something that is truly unique and specific to Web3. And this will hopefully create a drive towards, okay, we want to actually experience Web3, we want to use it for what it is, beyond speculation. And we want to, continue to explore the ecosystem. I think right now Web3 is still mostly consisted of traders and developers and people who are building businesses and not consumers. It's a lower quantity of people. But I think that we're moving towards that. And, we made massive strides over the past few years towards consumer adoption. Web3 used to be a hyper niche, just like a very hacker-esque ecosystem that was not anywhere near to the same level of consumer ready as it is today. But of course, I still think that we have a long way to go, both in terms of culture, in terms of technological capabilities. For the record, I think that infrastructurally, we're getting to a point now where consumer adoption is practical. I think that we are maybe a year away from being parallel to Web2 in terms of UX. I think from that point, you just need applications that are unique enough and are high quality enough that single-handedly can drive this adoption. Just like with AI, you saw ChatGPT, right? People didn't really care about AI except a small group of people until there was one consumer application that captured people's interests, and they looked at it and they said, this is a real technology that I can actually use, and there's a lot of interest in this to me. And all of a sudden, that vertical blew up, right? And so my hope is that Web3 will experience something similar. But there's, of course, hurdles to that. We first need to fix the infrastructure and the UX. I think we're getting that point. I would, like I said, say that by this time next year, we'll be in a point where UX is equivalent to Web2. And then we actually need applications we built that achieve that light bulb moment for end users. And I think, of course, things like the BNB Incubation Alliance can help a lot towards that and cultivate some of those applications. But my hope is that we're going to see a lot of this new, I call it like the consumer era. I don't think that we're there yet, but I would hope that we're going to see that over the next few years, especially as we mature past the stage of bottleneck by infrastructure and move towards the only bottleneck being needing to build things that users really want to use.
Thank you, Ethan. Thankfully, I feel that we have time. The industry is very early, and there is still many years of development. And we see new verticals emerging, like AI, DePIN, all the time. So yeah, at some point, I think a killer consumer application should be able to bring us forward. All right, thank you so much. Michael, your points, please.
Yeah, so ideally that in the next 3 to 5 years, hopefully that people are not going to talk about, is it Web3 game or Web2 game? Because every game is going to be a Web3 game, right? Especially for those games that you're going to ownership and finance is important, right? So, but of course, coming back to now, I think obviously the problem is the transaction per second is still very slow compared to a lot of games. Some of the transactions, it might take much longer time. Also because we understand it, because at the end of the day, it's about ownership and financials. So we need more approval, understanding of the users. I mean, like approval from the users on every single student step. Sorry. So these are the two things that is still the most important, and also being able to have a good security and validation from a good chain is also very important. So how are we tackling all this problem right now? I think, of course, first of all, we actually work with Particle Network on account abstraction wallet. So a lot of the things that the users do not need to approve or certified every single time in a lot of the transactions. Secondly, we built our own L2 in order to help to increase the transaction time or the TPS, because a lot of things can be transacted on the L2 first, and then later on be verified or on the L1, right? And of course, what was most importantly is that we have a good security and also a good validator from the L1 and the BNB, which is also very fast. And hopefully, when the technology is going to be more mature, then one day that when the consumer come in, they don't have to think about, is it Web3? How am I going to pay with what crypto on what chain, and what I'm going to approve? And I think this is going to happen someday, but I don't know when.
Yeah, but at least we have some progress. We used to majority call it GameFi, and then we sort of separate the five. Now it's Web3 gaming. Next step, gaming. Thank you for sharing. So Ruben, we'd love to hear your views.
Yeah, sure. So in crypto, we say we're in it for the tech, but for gamers, we're in it for the games, right? So we want amusement, we want love for the games. And I think if we take a couple of steps back, the end user will just be a very hardcore gamer, right? So they won't care if it's Web 2 or Web 3. We can make it as complicated as possible. So what we do, for instance, the user doesn't need to know any crypto knowledge or need to do anything. They can just start playing the game, they can enjoy the game, and then slowly they will learn throughout the journey of playing the game, spending some time in there, to learn more about crypto. Let's say you receive items that you do in different kinds of dungeons when you play the game. You can eventually sell those items if you want on marketplaces. That's where you start learning on how creating your wallet or creating an NFT, selling it, and things like that. So for mass adoption, I think it's important that we keep it as simple as possible so we can target a wider audience. That's why currently you see a lot of mobile gamings are being published right now, especially in crypto, on Tong, for instance, Telegram, these tap to earn games. But I think that, we have way more potential here when it comes to deep end, high end gaming. That's my take on it.
Thank you, Ruben. Yeah, I think as a gamer, and most game developers will know that, where 50% of gamers are actually mobile gamers. So I think the extension into mobile is a great move. Most games should do as many platforms as possible. So thanks for sharing the valuable inputs. Next up, Sky, please.
Yeah. So I think a lot of problem will be more into Web 2 gamers are still having a sort of a barrier, in a way that the perspective wise, it's actually crypto games actually not fun. Crypto games actually not really it's very hard to get in, or they have to pay to earn in a way, or pay to play. So there's still a bit of perspective towards gaming project as well, towards the Web3 side. So I think education wise is very important as well, which I think if let's say we can educate towards the Web2 side, gamers to come in as well. So I think innovation wise, I've seen a lot of Web3 mini games right now, Telegram, Town games are getting very, very popular, right? So I think the innovation is very good because we onboard a lot of Web2 users in just by playing the game. After that, there's an element of crypto behind it as well, where user actually they don't know that it's actually Web3 games. Then they are just playing it, and after that, in the end, they slowly will adapt it, and then after that, slowly the perspective will be different. So I think it takes time, but of course, I think the upcoming innovation side will definitely help a lot as well. Yeah.
Yeah, thank you so much, Sky. I just want to highlight from ecosystem point of view as well. Play to earn is not wrong. It's definitely a very strong market, and it's just that the market is growing where there is a growing group of people who is play to own. just like in Web2 game, like Genshin Impact, right? There's like 80% free to play, but 20% they willingly spend for the cosmetics and skin. This is the gaming ecosystem is diverse, so we do welcome everything, and we will build on everything. Eventually, like everything comes into place, building a major big gaming Web3 ecosystem. Thanks for all the inputs. So we will go into our last question, which is about decentralization's impact on gaming infrastructure. So we would like to ask, what role do you think decentralization play in the future of gaming ecosystem, and how does your work contribute to this vision? So yeah, Particle, please.
Yeah, I guess like I mean personally, I think that decentralization is at the center of the Web3 philosophy. If it's not decentralized, then I would barely consider it like a part of the Web3 ecosystem. I think that this is fundamentally important to create an experience that is in line with what we're trying to build and has the attributes that make it a Web3 experience in the first place. So I think decentralization is not only important; it is like a vital component of what creates a Web3 application or a DApp. Right? It's a decentralized application. From our side, I don't think we are like directly infrastructurally contributing to decentralization. I would say we're probably a credibly neutral actor in this sense. We're infrastructure that is also decentralized. And so if you're building a decentralized application with decentralized infrastructure, then you have, of course, a completely decentralized experience that lives up to the promises that we are, espousing to consumers. And so, I think that this is a very fundamental part of the Web3 culture and the Web3 ethos, and it is a necessity to actually have an experience. I think, sacrificing decentralization gets you sometimes fancier experiences or faster experiences and things of this nature. But I would say at that point, you're barely building in Web3, you're building in Web2 to some degree. And so I think it's a requirement, and I'm a big decentralization maxi.
Yeah, I do think that is what differentiates like the enhancement we're bringing to the gaming industry as well. So thank you for the points. Michael from Exterior, please.
Yeah, sure, of course. So I think there are two parts of the decentralization, right? One is, of course, the validating, verifications, and ownership, which already we have touched upon. I think on the other hand is about the governance of the game or the future of the game, right? I think it's important that the decentralization of some of the games, for example, if I tell you like in League of Legends right now, right? So it all depends on the developers of what's the next patch is going to be. And in the next patch, maybe a new hero comes out with better stats in here or there, and then you have to change. And then the players have to adopt to a new style of playing, right? But it all depends on the developers. They want to move into this way or that way, it doesn't matter, right? But with the decentralization, because of course we need a very good mechanism. Is it because of that you own more NFT, you own more tokens, or you stake more, or you have to decide later, right? But there is a future that there is possibility that the future of this game or the mechanism or which hero is going to have better stats or whatever kind of stats is decided by all the stakeholders. The stakeholders, not just the developers, but the stakeholders including those who are playing the game, maybe the KOL, maybe the ownership of the tokens, and by everyone. But of course, obviously, this mechanism is going to be very difficult. But I think there is a chance that there will be one day that will be a good mechanism. Then we see that this new hero is decided, or this new hero stats is decided because of all stakeholders through a very fair and interesting mechanisms. I think that's how I look at it. Maybe a bit idealistic.
Yeah, I think great point. As a gamer, I admit like we do give gamer rage over the meta and balances. So if you want to complain and be part of the DAO and have a talk, have a point in the meta. Thank you for sharing, Michael. Yeah, next up, Ruben from Sierra, please.
Yeah. Thank you, Michael, for sharing your vision. I kind of pretty much agree with what you said and follow it as well. I think there's what we see right now is that if you want to create a good game, there are obviously some centralized aspects into this, which is not what we're looking for. In the end, you want to make a full game that's completely decentralized and in the hands of the end user. But in order to do this, you have a sort of problem with mass adoption, right? So then they fully need to be aware of how to use crypto and those kinds of things. But what is important is just make the game as simple as possible for them to use it. and then gradually making it fully decentralized. So let's say not creating a wallet and those kinds of things. No, just let them simply log in with an email and password, start playing the game, and then out of that baseline, you start working towards like converting your Web2 user to Web3. So I think the future is very important in regards to onboarding different kinds of audiences towards crypto gaming, and that's something we have to focus on. So making it seamless and basically automated for them to basically convert from A to B. Yeah, that's my take on it, and that's how I see the future.
Yeah, thanks a lot for sharing. Definitely agree with all this that you've said. So next up, Sky, could you share your points, please?
Hello. Yeah, so I think for stakeholders, the wise is very important, especially for the gamers side, players, community as well. Because let's say if they have a stake in the game, for example, if they own the in-game asset as well, so of course they will be definitely more hyped towards it as well, and then they will definitely help in terms of growing the project as well, or the ecosystem of the game as well. So I think collaboration with KOLs is very, very important as well. Let's say if a big gaming KOLs or a big KOLs are having, for example, the NFTs inside the game, of course it does create a lot of hype as well, and a lot of fans wise also may get into the game as well. So I think there's a lot of angles that can work, especially on the decentralized side as well. So there's huge potential towards it. Yeah.
Yeah, thank you so much. I think definitely, like, to touch on what Ruben and Sky mentioned, I think we should definitely look forward to how Seraph managed the assets as well. I think the assets so far, from what I see, is really true community decentralization management, and I think it's a good model for developers out there. So once again, so this is our last question. We would like to thank the guests here for attending. Please give a round of applause for this, and hope you guys, have gathered valuable inputs. Thank you. Let's stay for a photo. Let's stay for a photo. Stay for a photo. Photo. Thank you once again. It's a pleasure talking to you guys. Yeah. Thank you. Thank you. Thank you. Thank you. Thank you so much. Pleasure. Thank you. Thank you. All right, guys, we have come to the end of our first two panels. We are going into the main event, which is the pitching. But first of all, let's welcome Sarah, head of APEC BNB Chain, to go through the rules of the pitching event. Sarah, please. Round of applause, please, for Sarah. Thank you. Test.
Hi. Just a short rule announcement, right, for the pitching. So we will start the pitching for the 50 projects today right now. The rule is like every project will have 10 minutes, 6 minutes for pitching, and the remaining 4 minutes for a Q&A. So today we have 10 judges each sessions. So every judges can feel free to raise your questions after the 6 minutes sharings from the project. And there is 4 criteria that we're using to giving score to different projects, which is sustainability of the operating model of the projects, which means you need to have a real business models to make it make sense. The second one is excellence of the founding team, which is the founding team, a background of them to really can make the projects to be a real one to happen, and to make the business to have a real demand in the real world. And third one is the innovation of the underlying infrastructure, which means you need to really innovatively combine your solutions with blockchain technology or any other technology like AI or whatever it is. And the final one is, most important one is the potential contribution this project can really make to BNB Chain, including different metrics, like for example, TVL, on-chain DAU, transactions, etc. So those are the 4 criteria where we're using to giving score to different projects. So guys, when you're pitching, do mission and highlight those 4 different dimensions. Thank you, guys. Let's get it started. Diana.
Come. Let's welcome Diana from the BNB Chain team.
Hello, everyone. Hello, and thank you for joining today. We're about to start our pitch session 1. And thank you, Melody from Spartan. Would you like to say hi to everyone? Yeah. Thank you, Rajiv from Framework. Yeah. Thank you, IOSG. Yeah, Gumi. And BNB Chain, Binance Labs, Nicola. We also have Manyala. Yes. And we have Andrea from Animoca. And we have Joanna. Thank you for being our judge for session 1. We're gonna welcome our first pitching project, CarbonFi. Welcome to the stage. And everybody, the project has been making a lot of efforts for this pitch, so please be quiet and show some respect. Thank you.
Hello guys, good afternoon guys. Thank you for having us today. I'm Tommy and that is Eddie. We are the founder and owner of CarbonFi. CarbonFi is an initiative design platform to reshape the carbon credit market in 3 focus. The first focus is transparency. Second, integrity. And the last one is security. Let me go back a little bit of the background of the project. Chalerm Sekong Energy Group was established on 2009 and now is a leading company in Laos about the clean renewable energy in Laos with the installed capacity around 1,400 megawatt. Our carbon credit backed up by highest global acceptance standard, which is the gold standard and Vera standard. In order to improve the transparency and also the quality of the carbon credit, we use a smart forest system to ensure that there is a transparency of the project, which include the satellite image, real-time updates, and also we have working with the local communities to send us the real picture of the site area so we can get connected and accountable for the site progress. In Laos, we have 6 million hectares of forest, which a potential to create 500 million tons of carbon credits over the next 30 years. And we, as a developer, we planning to unlock this potential of the project by 3 phases. The first phase, we plan to unlock 3.5 million hectares with the 50 million tons of carbon credit. So the estimated value around 1.5 billion US dollars. The second phase, we plan to increase to 9 billion US dollars. And the final phase, we plan to unlock all the forest area in Laos, which is 16 million hectares of carbon credit with the potential to create over 500 million tons of carbon credit. The estimated value will be 15 billion US dollars as shown in the slide. As the timeline you can see in the monitor, the screen, we have been conduct the concept study since 2016 and we have signed the first memorandum of understanding with the government of Laos on 2023 with the area of 655,000 hectares. Within this 1 year, we have complete and successful signing the memorandum of agreement with the government with the area of 3.5 million hectares. And also, we have signed a memorandum of understanding with the government of Laos to create a carbon credit market for the whole country. As you can see in the screen, this is our previous Prime Minister. As you can see that our government is very supportive to the climate action against the increase in the temperature. And we also commit to the Paris Agreement of the net zero by 2050. And this is a signing ceremony of us and the government of Laos, which attended by the Deputy Prime Minister of our country. And today, as I present, we also have government representative from Ministry of Forest also come here to listen to us pitching. So next part, I will hand over to Eddie to present you on how to bring the carbon credit to the global market. Thank you.
Okay, so Carbon5 is the Web3 solution to significantly improve the carbon market world with better security, transparency, and financial connectivity, which are all main big problem in the carbon credit world today. So the innovation from having decentralized blockchain technology will definitely help improve the efficiency of the carbon market by significant. Quick introduction about the broker group, my company. We are a listed company in Thailand with 30 years of financial service experience. We closed deal for over $10 billion already since inception, and we're the only listed company in Thailand with majority of our asset in crypto today, over 50%. And for the blockchain solution, we really like BNB Chain due to its large number of social media presence and strong team. Obviously, 470 million unique user is a big number with 100 million active user and 2,000 D apps that we intend to connect our marketplace with in terms of lending, analytics, NFT, and so forth. This is the basic UX UI that we designed for the marketplace. So we separate the hybrid function from the complete Web3 function. The hybrid function will account for minting and redemption of token, while the Web3 accounts for buying and selling, analytics, and all so forth, so that institutional buyers can have proper KYC, custodian, which will make it very easy for them to onboard. We'll go quickly. So this is just the basic UX. The value lock Tommy already mentioned. We intend to bring over 9 billion value to the BNB chain. And from minting and redemption fee alone of the marketplace, we intend to charge 5 to 10%. So that already adds to over $1 billion in revenue over the next 30 years for the protocol token and the founding company. The expense that we project is around 600K per year at the moment, but definitely will increase as we expand the business and the scale. We intend to finalize everything in Q4, and by Q1 next year, we intend to launch the project, which will be in line with when the environmental report is finalized and carbon credit will start coming in. And by 2025, we will go to the second phase, increase the scale to 9 billion hectares, with market value 9 billion to the ecosystem. Okay, final slide. Our highlight is sustainable revenue from mint and redemption fee. This is before any trading activity on chain or any DeFi activity that will happen. Large amount of value that we can bring on chain and easy accessible for both institution and retail. Thank you. All right.
Now it's time for the judge. Any questions?
Quite a lot of information to present.
Thank you, Carbon5. Please let me know from our judges any questions you want to ask.
I have a question. I saw that you said you started in 2016. Why did it take you first MOU to come through by 2023? What was the delay?
The whole thing is the traditional carbon credit. So it takes time to study the forest, like 5 years of data, and working with the government as well, and working with the global standard. So there's a lot of requirement, which is one of the big barriers to entry the carbon credit industry. But we'll get everything done by Q4. and start accumulating carbon credit and put on the on-chain system.
Thank you.
I just want to check, do you have any like tech-related entry barrier to protect your projects to be enhanced or overchased by any other projects doing similar things? Only like tokens or the government relationships?
Okay, so the big pain point for carbon credit project is the scale. If the project scale is too small, a lot of protocol try to combine small scale projects together. But we operate in this field for so long, and we know that buyers like big scale project that can supply credits to them in the long run. As I mentioned, there's a very big barrier to entry, whether it's the data working with top tier verifier alone. So the barrier to enter the carbon credit market is very high. And our project has over 300 million tons of carbon credit, which is more than enough scale for us to put all the resource into legal, custodian, and proper structure of both the company and the Web3 application.
Okay, thank you.
Any other questions? Thank you for sharing Carbon5. And now let's welcome our next project to pitch, RateX. Welcome to the stage.
Thank you.
Thank you.
Good afternoon, ladies and gentlemen. My name is Sean, and I'm the founder and CEO of RateX. RateX is the next generation yield market, and it's the world's first leverage synthetic yield exchange. And just first, let me briefly introduce myself. Before starting RateX, I used to be a portfolio manager in fixed income investment. I've been working in this field for like 12 years, and I used to manage like at least billions of US dollar asset. And late last year, I think it's December, I just founded RateX with one of my former colleagues. He used to be one of the top rates derivatives trader in the market, and a group of engineers to found RateX. Right now, we are a team with 21 people, and I think over half of the team members are devs. And I think in March, we just got a grant from Solana Foundation, and in April, we got the first prize in Solana's Global Hackathon Chinese-speaking area. And also in April, we just received we just finished our pre-seed round with some investors like GSR, SNZ, and Mocha. And let's go back to the product. I think I'm sorry. Let's go back to the product. I think RateX at least can provide 3 products for the users. The first is leverage yield trading. And in this part, we can offer leverage for users to trade yield token with up to 10 times leverage, and the users can just spend a small amount, a lot of money, and to leverage a pretty big amount of yields. And it's a very it's a very capital efficient way to speculate or hedge to speculate on the yields and hedge their yield risk. And another product is Earn. The Earn product for RateX, we have right now actually provide 2 kinds of products. The first is Earn fixed yield, and this is just like exactly the same what panels can do. Just it's PT, it's principal token. But and what we can do is just give users leverage to achieve to achieve a carry trade strategy or multiple strategy for the users, and we can also have additional yield strategy for the users. It's just for a liquidity provider. You deposit your yield bearing asset into the liquidity pool, and you can earn additional yield based on this yield bearing asset. And the third product, I think, is our synthetic points trading product. And we can derive the points from the yields for the users to trade. You can, and that makes the yields not only it's not untransferable, and we just create a transferable yield token for the users to trade. And those are the three products we can at least offer for the users. And many people may ask, what's the difference between RateX as a panel, and why do you guys think you're the next generation yield market? And I think at least we have 4 advantages over panels model right now. The first is that we offer leverage. And since we offer up to 10 times leverage, the capital efficiency on our product is basically 10 times. It's just 10 times than the efficiency on panel. And since you know the panels model is, if you want to trade YT, you're basically trading PT, and the trading fee is pretty high since the value of PT is relatively high, much higher than YT's value. But in RateX, our model is pretty straightforward. If you want to trade YT, if you want to trade yield, you just trade YT. So it helps you save the trading fee. And this is the first important differences between us and panel. The next one is the liquidity provision efficiency of our product is much higher than panel's model right now. I think that that's all because the way we generate YT is different from panel's model. And if you guys are interested in this, I can explain to you later. And the third important part is that we can basically, theoretically, we can generate any YTs for any kinds of yield-bearing assets, even if there are no yield-bearing tokens on it. It means that if you have a yield data API, I can generate US Treasury yield token or US CPI yield token, something like this. And I think that the fourth part, as I have explained before, we can just synthesize points for the users to trade. So I think that's the 4 core differences that makes us different from Pando. Yeah, and there are still we still have a lot of differences, and we also offers long short trading strategies for the users, and makes us the strategy choices for our users. And we actually support a lot of assets. And let's go back to the key point why we are trying to build on BNB Chain. I think Solana, the TVL on Solana is just like 5 billion, and the TVL on BNB Chain is also almost 5 billion US dollar. But the yield opportunities on BNB Chain is, as I can say, is not that attractive than the Ethereum mainnet. I'm sorry. But what attracts me is that I saw BNB Chain is doing something that I really want. I really want to say. I want to see is that they are trying to bring BTC-Fi and RWA to BNB Chain, and I think that will be the battlefield for us. So that's why we want to participate in this field. So yeah, I think it's a great opportunity for us to participate. Thanks.
Thank you for the sharing. Any questions from our judges for RateX? Sarah from BNB Chain.
I have a question. You mentioned about the yield on BNB Chain is lower than Ethereum, but by having your projects, we can have higher yields. But so where are those yields will be coming from by having you to BNB Chain ecosystem?
I'm sorry. I think it's. I just cannot hear very clearly, but.
My question is, you mentioned about the yield on BNB Chain is lower than Ethereum. So my question is, like, by having your projects deployed on top of BNB Chain, like, what you can do to to contribute on this to get a real higher yield for the end users, and that is some real, that is a long-term yield, not just a short-term for the token pump and dump.
Yes, I think it's a very good question. As we have noticed that the native staking yields on BNB Chain is pretty low, and it's almost zero, right? And I'm sorry, but what we can see is that the LP's yield on BNB Chain is pretty high. And I can see a lot of liquid LP pools on BNB Chain, and their yield reaches like double digits, up to 30%. I think that is a great opportunity. And if the trading activities on BNB Chain is becoming more and more active, and there will be a great yield trading opportunities for the users to trade. I'm sorry. And this is the target market for us.
Any other questions from our judges for RateX? Oh, I guess that's it. Thank you so much, and welcome our next project, Termix, for their pitch.
Okay. Good afternoon, everyone. My name is Masa, and I'm excited to introduce you to Termix, an AI-driven Web3 operation system that helps users trade, create, and earn smartly. In today's Web3 landscape, users face a complex array of layer 1s, layer 2s, and protocols, making it overwhelming to navigate, resulting unfriendly, user-unfriendly, unfairness, and fragmentation experience. So that's why Termix come in. We want to build in a unified Web3 user portal here. We envision a world that every Web3 native operations, whether it's swapping, transferring, lending, or staking, can be done by AI seamlessly. So what set up Termix apart from is three key advantages. Like first, they can do intelligent intention recognition and precise multi-layer routing. And second, we can decompose natural language into automatic operations on different chains. And finally, we have high customization. Nowadays, everyone's talking about Web3 plus AI, but the truth is AI is not 100% reliable yet. So that's why we built Termix trustworthy execution protocol here. We combine the advanced program reasoning, security check, and a powerful large execution model here. That means every operations passed by our AI matches users' intention perfectly. So what's different from our large execution model is we do a different type, like general AI projects do. They use large language model. So our large execution model directly translates users' intention into on-chain actions here. And we are the first on-chain AI execution infra in Web3 today. With Termix, users can do anything in Web3, do trading, DeFi, asset management, and information gathering. So, and even more, our AI can combine these operations into an automated workflow. With the workflow, users can create their agents and make revenue. They can share their workflow into our agent universe here, including trading agents, job hunting agents, data analysis agents, and they can do batch processing agents here. Our product is live now at Atomics.ai, and we just have a user-friendly OS fronted, and we have integrated over 20 public chains, including BNB Chain, Ethereum, Solana, and Aptos, and so on. And we have integrated so many protocols with our powerful functions that can make users make their ideas into reality. For users, low coding ability is used with our zero code IDE in a chat agent playground. All they have to do is just to type their ideas, and our AI can help them generate the entire Web3 operation or workflow for them. Here is a short example, like with the integration of BNB Chain, Solana, and Aptos and Tron, we have the first degenerate trading aggregator here. We can use AI to seek alpha projects and find and trade meme coins here. We have integrated 4.mimin, pump.farm, and SwanPump, and so on here. So this is just the beginning. Everyone can create the agents here and upload it to our agent store. And as a real operation system, users can find any Web3 applications they want. Our tokenomics is designed to encourage users to create and share their agents here, and our token will deploy on BNB Chain. Our token can be easily transferred as any multi-chain assets here. So this will be a bridge between BNB Chain and other so many chains like Solana, Aptos, and so on. We are the first trustworthy AI here comparing to other products, and we have launched our alpha version in the mainland in Atomics AI. You can just find it, and in the future we will expand our ecosystem and the partnerships. Our team is a group of talented PhDs. Yeah. I just graduated to obtain my PhD degree 3 months ago, and this is my first official project. We have a lot of experience on AI and Web3. And by the way, our CEO she's a former senior vice president from a centralized exchange. Okay, thank you everyone. That's Atomics, and we hope we are the future of the Web3 portal. Thank you.
I have a question. Can you highlight a bit more about your difference with other AI agent or like MyShare or Double Oasis? What is your difference and what is your strengths?
Yeah, as I just said, we are the trustworthy AI. In today's AI, not every AI is 100% reliable. When you want to do an operation, you say to AI, I want to transfer one Ethereum, one ETH to Vitalik.eth, but the AI realized you just want to send 0.1 ETH, and that is completely wrong. So our technology is based on program reasoning and large execution model. We can do the OP code level double check for the users. So our AI past operation is 100% reliable and completely match the user's intention here. Yeah.
I have a question as well.
Okay.
Kind of related to that. Are you building your own language model? Are you building your own LLM for processing the intents? And how do you protect prompt injection attacks, because this is a new space altogether?
Pardon?
So question number one, are you building your own language model to process the intents and execute the intents? And, question number two is, how do you protect the user from prompt injection attacks or hallucination attacks? What is the differentiator?
It's a two-stage language model. The first one, we do the parse of users' intentions into the on-chain actions, and the second, we do the OP code level double check. Yeah, when you use Solidity, every transactions will be encoded into an opcode, and we can use the machine learning technology to analyze whether the parameters we extracted from user's intention is completely right. Yeah, so that's in conclusion, it's a two-stage AI. Yeah.
Thank you.
Hey, thank you for the presentation. I would be quite curious to hear more about your go-to-market approach, because using AI agents is pretty different from like what users are used to doing right now, right? I might be using like 1inch or like PancakeSwap to make a trade. Like, why bother using AI agents?
Yeah. As for the go-to-the-market, we introduced the first multi-chain meme coin trading aggregator here based on our automatic operations ability. So the users can find and trade the meme coin on different chain via our tomics. So we have integrated the 4.meme that's backed by BNB Chain, and we have integrated Pump.fun backed by Solana, and V-Star backed by ETH, and Sun Pump backed by Tron. So with the ability of trading and finding such many meme coins, and we can make users to make revenue here. So that will be a great code launch for our project now. And then we can expand our ability into different trading strategies, like everyone can save. Imagine that a professional trader can save his trading strategy and publish it as a new agent. So anyone can use his strategy and make revenue, and the contributor will also got the revenue here.
Got it. Thank you.
Okay, thank you. Thank you very much.
Thank you. Thank you, Termix, and let's welcome Alo.xyz.
Hey everyone, I'm Kingsley Advani, founder of Allo. We're a protocol for Bitcoin and real-world assets. So I just want to get a quick show of hands. Put your hands up if you own a real-world asset. Keep your hand up if it's on-chain. Put your hand up if you own Bitcoin. Keep your hand up if you're staking it. Keep your hand up if you're borrowing against it. Okay, we have lots of work to do. So my background, I'm a Bitcoin OG since 2011. I've made over 200 investments in the space. I started the fund in 2017. We owned 1% of Solana. We didn't hold on to it, unfortunately, but we're very early in a lot of layer one projects. And I started a fund administration platform back in 2019, and we scaled to over $2.2 billion in real world assets across 1,600 private funds. We've also recently secured, and I'm happy to announce it today, $100 million Bitcoin-backed lending facility. We have top investors in the RWA and Bitcoin space, and top partners including AltLayer, Babylon, BitLayer, and Chainlink. So there's 21 million idle Bitcoin that we could be doing more with for staking, for borrowing against, for lending. And we have $900 trillion in real world assets. So there's huge market opportunity to bring all of this on-chain for trading, lending, staking, and borrowing. So we've built a protocol for Bitcoin and real world assets with deep BNB Chain integration. Firstly, we have Allo Lending. We have secured $100 million Bitcoin-backed lending facility. And we're leveraging BNB Chain with an integration on BTC-B wrapped Bitcoin, which makes it a lot easier to to mint Allo BTC and stake and borrow against. We also have Allo RWAs, so we have $2.2 billion in real-world assets deployed today on BNB Chain on mainnet across 25,000 transactions. So thank you, BNB Chain, for working with us to get all of them deployed. And finally, on staking, we have $30 million of Bitcoin staking pipeline for our investors who want to stake their Bitcoin and earn rewards across Babylon, BitLayer, and other Bitcoin staking protocols. So again, we unlock 21 million Bitcoin with dual staking and borrowing. This hasn't been done before in the world. You can't stake and borrow against your Bitcoin simultaneously. And we have a very special integration. We've been working very closely with Babylon and different custodians to enable users to both simultaneously stake their Bitcoin and borrow against it. Here's more technical diagrams. I'll just gloss over, but you can ask me more later. We have custodial wallet integration with API signatures. So again, for dual staking and lending, you have to have a dual staking signer covenant and a borrowing signer covenant so that you can do both staking and liquidations in the event of default. We have a strong ecosystem across DeFi and TradFi. And again, we're a global first mover in dual staking and lending. And there's more. So that's on the lending side. On the RWA side, again, we have $2.2 billion in RWAs deployed on BNB Chain. So we've built the OpenSea for RWAs with integrated fund administration. As I said at the beginning, I started a fund administration platform 5 years ago, and it's grown to top 25 in the world. We have a broker-dealer licensing in the US, and we have tokenized SPVs and funds. We have over 1,600 of them. We have proof of reserve, I'll show you in a little bit, with an integration with Chainlink, and we can do atomic secondary swaps. We're leveraging BNB Chain, thank you again, BNB Chain, for order matching, which makes it a lot easier to trade secondary positions of real-world assets. We've done 10 SpaceX SPVs on our platform. We're doing a few more as well. We've done OpenAI, Stripe, Databricks. So we have a lot of top-tier, high-quality real-world assets that our users want to trade. We've done 100 to 200 million of secondary trades. On the fund administration side, we have vertical integration. So we're not just wishfully hoping that the assets exist. We have proof of reserve. We have the fund administration layer. So we're able to do audits with Chainlink, who we've partnered with on proof of reserve. So how do we become a $10 billion protocol? Well, we'll be able to generate $1 billion in ARR. So let's take the debt side. We're in talks already with Bitcoin holders that want to borrow against up to $30 billion of Bitcoin. So once we raise $10 billion of debt, we already have $100 million in debt commitment plus another $1 billion of debt interest. We'll charge a 2% fee and generate $200 million in ARR. On the equity side, we have $2.2 billion in real-world assets today. Once we scale to 10 billion, we charge a 5% fee, and we can generate $500 million in ARR. And that doesn't even include the staking revenue. So with that revenue, we plan to buy back the token and burn the token, similarly to Binance. We've already enabled staking. We have 100,000 points holders on Allo currently, and about 30 to 40,000 of them are staking today. We also have a governance model where Allo token holders can vote with their Allo tokens. So if you compare us to other projects, you can look at the decentralized lending piece. Aave has $100 million a year in revenue. At a 20x multiple, they're currently at a 2.1 billion market cap today. Ondo, 600 million TVL. They're at a 10x multiple. Allo, if we launch tomorrow, theoretically, we could have a $2 billion market cap. We have over 40 years of crypto and TradFi experience. Again, I'm a crypto OG since 2011, made over 200 investments, and we have a top team of TradFi fund admins and blockchain natives. Thank you. Happy to take any questions.
Hi, Kingsley. Hi. Why are you putting the fund admin platform and the Bitcoin assets into one platform?
Yeah, so we have different product lines. We have the lending, the equity piece, and then the staking. So lending, trading, and staking. So we already have done 100 to 200 million in trading. We have a lot of Bitcoin OG investors that want to borrow against their Bitcoin. So similar to how Binance, Coinbase have, 10, 20, 30 different product lines, we have two main product lines in trading and lending.
So these are two different products.
Two different product lines.
Right,
Yeah.
and two different set of users and go-to-market strategies.
A lot of the users are the same. The same guy that puts in 10, 20 million in SpaceX also has 1,000 Bitcoin. So our users are crypto whales. That's how we started. They started investing in private markets, and they also have a lot of Bitcoin as well. So we invested in our group about $500,000 in Babylon. And so we're staking about 500 BTC just on Babylon. So that's immediately addressable through our platform.
And do you see this as a B2B, sort of like a wealth management type of business, or do you think it's more kind of consumer, eventually going to retail
it's a good
consumer?
question. We're starting with crypto whales. So that's, crypto whales with, tens, hundreds, thousands of Bitcoin, and who also trade, secondary positions in things like SpaceX, OpenAI. So I'd say it's more on like the higher end of where, like, if someone wants to deposit 0.001 Bitcoin, we can technically do it, but we'd rather focus on the big tickets.
Any other questions from our judges to Alo? I guess that's it. Thank you, Alo.xyz. Now let's welcome Captain Subasa to the stage.
Hello. Yep, we are Mintown. Now we are building a game network for Japanese IP starting from Captain Tsubasa Telegram game. Oh, yeah. So my name is Hiroku Nimitsu, founder and CEO of Mintown. And before the Mintown, I was founder and CEO of Gumi. And Gumi is one of the leading mobile gaming company in Japan. I found Gumi 2007, listed at Tokyo Stock Exchange 2014, and 2021, I stepped down Gumi CEO position and start Mintown. My partner Isao, he was former CEO of DNA. DNA is also one of the largest mobile gaming company in Japan. And so far, we have very strong relationship with Japan's big IP company. I made 2 Final Fantasy mobile game together with Square Enix. And Isao made 9 Nintendo games together with Nintendo, such as Mario Kart Tour and Pokemon Master. Yeah, so this is our companies. We have many good backers. Yeah, so our goal is building a gaming network for Japanese IP by combining BNB Chain and Telegram. Yeah, so let me just introduce our new game, new Captain Tsubasa game. So Captain Tsubasa is one of the most famous football IP globally. Their comic sold more than 90 million. And then their animation is all around the world. And we can bring the user outside of Web3 industries. So we have global football fans and also Captain Tsubasa comics fans. And also we can bring Captain Tsubasa Web2 mobile games. So you can see the number. And by the way, Andreas Iniesta, Yuto Nagatomo, they are one of the most famous football players. They also ambassador of our games. So we can bring those users outside of the Web3 spaces. And this is our track record. So far, we made 2 Captain Tsubasa games. 2017, we launched Captain Tsubasa Web2 mobile game. This game, we made more than 500 million from in-app purchase. Total download was 45 million. And 2022, we launched Captain Tsubasa Web3 game on Polygon chain. User is quite small, but we made 10 million revenue. And then finally, we launched new Captain Tsubasa game on Telegram. We just launched yesterday. So this is roadmap. So phase 1 is just clickable type of the games. And then eventually, once we accumulate many user base, and then we put PVE function or PVP function scheduled at December. Unfortunately, today I don't have a time to show the video, but if you guys have any interest, we have a game video. Game looks very good. And then also, we're talking with new Japanese IP. And this is go-to-market. So we have many partners globally, and within 24 hours, we get 750,000 users. Yeah, pretty good start. And so making Japanese game network, how it works. So first of all, we launched Captain Tsubasa game, and then using clicker social farming and accumulate user base. And after the TGE, we use that user base to new IP game. And then the user who participate Captain Tsubasa social farming, they can get SVT. And then user have SVT, he can have advantage for next IP games social farming. Then let user to motivate, keep play like mini app. So building a gaming network for Japanese IP, we want to bring this one to BNB Chain and also Telegram. So lastly, why us? So this is first Telegram game with Japanese IP, and then we will accumulate a huge user base. Second, relationship with Japanese IP holders, and strong track record and development skill. So yeah, I think we can bring many users to BNB chain. So I hope you guys can accept us. And also now we are doing the seed round. So if you guys have interest, please contact me. And by the way, Evans is my friend, and so please keep in touch. Yeah. So thank you very much.
Hi, hi here. I have a question. Melody, thanks for the presentation. Very impressive. You built the previous successful games and still doing a startup today. I have a question on what you're trying to build with Telegram and Binance and BNB Chain. Do you think you're building a platform or with product, or do you see it as a new gaming distribution channel?
Yeah, so I think this is IP and no IP is different. So non-IP, maybe one platform, token, and many games on it. That's possible. But if IP, famous IP holder not allowed to do that. Just imagine One Piece. Yeah, they are gonna issue own token, right? One Piece token, Dragon Ball token, Attack on Titan token. So so that's why I said not platform, like Japanese IP network. So we use this network as cross promotion, and then each user can get SVT. That's keep motivated, right?
Is there any UGC or blockchain technology element in, user-generated content or ownership by creators, like from community creators, or do you think it's purely you create an IP network, you develop the game yourself, and then you use Telegram and BNB Chain as your distribution channels?
Yeah, so right now this game is just not UGC, and then starting point is we make by ourselves, right? But eventually our network open to other people. So maybe next title going to the UGC, and in my experience, when smartphone businesses started, that time user acquisition cost is very low. And then now Telegram user acquisition cost is very low, but eventually that's going to huge, right? So at this moment, we have to get as many users as possible. And if we have a user base, that's also a benefit to convince IP holder to give us good IP.
I have a question. This is Nicola from Binance Labs. So I like the part where you have existing IP fan base, but how would you expand your partnerships with like future Japanese IPs, especially the current popular ones?
Yeah, so I think Japanese IP holder, most of them is very conservative. So relationship is very important. So this thumbnail is not I just put it. This game, my company and Isao's previous company already used this IP and make success. So yeah, this is the game we made previous companies. So yeah, this kind of the relationship or trust is very important, I think.
Thank you, Mintang. Any other questions from our judges? And thank you, Nicola and Melody, for the questions. I guess that's it. Welcome our next pitching project.
Thank you very much.
Welcome Hajima AI.
Okay. Hello, everyone. My name is Melody. I'm from the team Hajime. Hajime is a Japanese meaning beginning of everything. So basically, one sentence to describe what we're doing. We are decentralized multi-agent graph towards the collective intelligence, which means like we connect multi-agents to a platform and then organize them in a decentralized manner, and then encourage people to build different workflow, agentic workflow to unite different agents to help them to accomplish different tasks. So a little story about like how this whole thing starts. It's like last year I went back to Berkeley to meet some friends and schoolmates last year. And then I met my co-founder, Gary. Gary is doing his PhD in Stanford. So we talked a lot about how amazing progress of the AI is doing right now. He told me that in the Bay Area, like the Silicon Valley, right now there are two trains. So one is like big boys, they are competing with their GPU power, computing power, and then large language model doesn't allow any chance by any of the startup. But on the other hand, there are a lot of like creative people. They are building a lot of multi-agents like outside, and then so many individual and small teams, they are building AI agents that will encourage a lot of people who probably cannot code, who probably have multiple ideas, but they don't have a proper engineer team to build the thing that they want. So he told me that, do you believe in the future that at one day AI agents is gonna outnumber human beings? So imagine that in the future you want to do something, for example, open a company doing a medical like device, selling website or e-commerce company or anything like that, you're not going to go to a LinkedIn to hire people. You're going to go to kinds of company or platform and hire the AI agents. And then I said, okay, that probably might happen in the future. And Gary told me, no, this is happening in right now and in the future. So there are a lot of like company in the Silicon Valley started thinking about we should build a platform and then unite all the agents and help people to accomplish complicated tasks. But Gary told me there's a slightly problem about the centralized way they do this. It's because imagine that you put a lot of time and effort to build an agent, which means you fine tune the model and then you have your specialized knowledge base, which is a RAG, and then you plug into the centralized platform. You're always facing the risks that they will steal your intellectual property or they will copy your model or your privacy with the special knowledge base is going to be at risk. So me and Gary discussed the whole afternoon saying that we probably should just build a POS network, we organize everything in a decentralized way, and then organize different GPU power to help the AI agent builder to build on our platform. This is why we start the whole thing. And later on, he brought up another problem is like, how should we provide the privacy thing? It's like we can use the TEE plus the POS network to guarantee the AI agents will be protected. In this way, we will have the advantage compared to all the companies who are trying to build a multi-agent platform in the Valley. So here is like how we started. And also according to his like teacher, like Professor Andrew N, the research shows us that the performance of different multiple AI agents organized collaboratively together, their outcome might outperform the single AGI. So academically, this is also supported. So with this vision, we started building this platform with self-fund. Right now, we don't have any funding right now. We're at very early stage. So right now we already have several multiple AI agents running on our network, and also because we're a POS network, we already sold $1 million USD to the retail. And then this is we finally, after several months effort, we finally hit the first phase. We already have the infrastructure. We already have the agentic workflow infrastructure, allow different third-party AI agents to plug into our platform. So you can see here is like creating a workflow, and then you can put some tags in it. The reason why we're putting the tag is because when the retail user, for example, they said, oh, I want to build a bot that collects different information and then translate into 10 languages and put it on Twitter, we're trying to incubate different influencers. So with this platform, they can use different agents and create this workflow. And then with just a very simple combination of different AI agents, they can already accomplish this task. So right now, the infrastructure is already ready. And another video shows that because we're a POS network built on top of the layer 1, so we have we will allow different GPU provider to plug into our platform. So in this way, we also can provide some of the GPU power to the AI agents developer that they can run the inferencing part on our network. So this is the node and the agent register. So basically, we already have this part developed too, which means that if you're a GPU provider, you can also plug into our network and then start to become one of us. So on our platform, there are 3 parties. One is the GPU provider, one is AI agents developer provider, and the last one is retail user. And also within the team, we are also building different in-house AI agents too. Right, that's about it. This is our team. I'm running out of time. Okay, right. Do you have any questions? I can answer some questions.
Any questions from our judges? And thank you, Melody, from Hajime AI. Any judges? Any questions?
I have a question. What's the go-to-market and monetization model for each of the stakeholders that you talked about?
Sorry, I can.
What's the monetization model for each of the stakeholders that you have? The developers, the GPU providers. How are you thinking about monetizing this?
Monetize things. Right. Good question. So at the beginning, it's like AI agent provider. They provide different services to users. Some of them can charge people with fees, and some of them they don't. So I think right now a lot of people probably don't charge, but in the future when they create like useful like services, they can charge. And as for Hajime, we charge them with platform fee. It's like that's our basic business model. And we also have another small thing called Benchmark DAO. So actually, there's an organization in Berkeley, which is an NGO. They charge different model for reviewing. Each time $1 million, and then they claim they have like a 500K users. So that's why they can use human beings to verify like how good is your agent, how good is your model. They're charging people with very high fees, and with the token incentive, I think we can organize a huge amount of population in a very relatively short time, and then in that way, we can also charge like different big companies like with the fee, and then that's one of our revenue too. That's also how it works. Yeah.
Thank you.
Thank you.
I have a question. This is gonna be a POS network, if I'm right. So how that can be related to BNB Chain? Can that be a BNB layer 2 or?
Sorry, how to
like this is a POS network by itself. So how that can be really contribute to BNB Chain ecosystem?
Sorry, how does people
to contribute to BNB Chain ecosystem? How it can relate to our ecosystem?
Oh, the BNB chain. The first one is we are a POS network built on top of the BNB chain or other chain, of course. We don't store all the things on layer 1, but the thing we store on chain is the verification information of like whether this AI agent is stably like providing the services to the user. So 4 points: latency, stability, the privacy protection with TE, and also the payments. We'll go through all the things. And right now we're actually talking to a lot of like AI related game maker. So the small mini games like who can build on Tong or build on BNB chain. They can also, we're trying to build the infrastructure they can plug into our system and then pay. And then all those like flow. I think most of the revenue will come from the game still, like for now, because like a lot of AI services like for free anyway. So right now we are building two category: game related stuff, and then we build in-house agents that's trading centric. So because we're like crypto native, I think most of the demands and also the requests will also still coming from like trading, automation of the trading or things like that. We just try to use AI to empower that and make people pay. That's the aim. Yeah. Right. Oh, and by the way, we are very, very early stage. As I said, we are self-funded, but we successfully sold $1 million ish, like not exactly $1 million, singly in Japan. And then so we still have funds, but welcome to reach out to us. We're cheap, we're young, we're early stage. We don't generate revenue yet, but welcome to incubate us. Yeah, thank you.
Thank you, Melody. Thank you, Hajime AI. And let's welcome our next project, Binomial. Welcome to the stage.
Hello. Test. Okay. First of all, thank you guys all for listening to me today. I know it probably gets really tiresome, but my name is Snaebot. I'm an exited founder for a company called Monarch Wallet. We were basically the first wallet to offer in-house staking. Sold it in 2023. And why I'm talking about that and not Binomial right now is I get a lot of market insight. Over 2 million users and a multi-asset wallet with in-house staking. So the question I really had to pose to you guys today was why why, even though the biggest hurdle is onboarding with MetaMask and Trust Wallet and all these amazing onboarding assets, why is it so hard to attract developers, attract builders, attract more complex DeFi applications onto BNB? So the first thing I'll say is, we are a protocol that's applying shared security directly onto BNB. We're a completely native BNB shared restaking platform. And so the biggest problem right now is lack of infrastructure. How many DAs are there? How many shared sequencers are there? How many shared provers are there? How do we help all of these different builders to easily onboard onto BNB and actually utilize the liquidity that's already there? Lack of CeFi adaptability within existing products. What works for Ethereum or Solana or a variety of different L1 chains does not work for BNB, right? This is a very particular, very special ecosystem. And every ecosystem is special and unique in their own regards. And of course, the lack of BNB native asset support. So frankly, even if you're looking into, for example, the Bitcoin layer 2 ecosystems right now, pre the launch of Babylon, they're glorified ERC20s, right? That are just essentially wrapped assets on, not actually a Bitcoin level or layer asset. So that's where we come in. We are completely BNB native. Our first tackled solution is shared security. So that means stakers would offer ABSs, a security mechanism, or crypto economic security via collateral. Number two is creating DeFi restaking security. So that's essentially letting builders build, right? Letting actual companies and entrepreneurs build instead of worrying about the overhead of security. Shared sequencer. Now this is a big one, right? When you look at the variety of different companies these days, whether it be parallelized EVMs or L3s or alt VMs in general, one of the biggest issues and problems right now is having a shared sequencer. So shared sequencers are vitally critical to prevent any sort of centralization risk or any sort of basic government security issues, right? And there are a lot of different lawsuits and cases provided that when people have centralized sequencers, it's a big no-no. And of course, native asset support. So we are supporting, at first, a very select amount of BEP20 assets that are not just BNB, right? So that means all the variety of LRTs like LIS BNB or SLIS USD or BTCB or wrapped Ethereum, even all the way down to meme coins on the BNB ecosystem. So I'm not going to bore you guys. I'm sure you guys have been educated on whether it be EigenLayer or Babylon or Symbiotic. I'm not going to explain to you what shared economic security or shared security or restaking platform, middleware platform does. Rather, I'm going to highlight what Binomial does best, right? Firstly, as I spoke earlier, the BNB native asset support. Allowing all these different BNB assets, whether it be BEP20 or BEP 332s, to be staked and used as collateral for crypto economic security. And that's a huge one because that provides additional utility to all these, essentially all these chains or all these projects that may lack additional security or utility in general. And the second one is native risk management tools, that's going to be built into the protocol. And the third and largest, and I think everyone's going to adapt this to Eigen and Babylon, to everybody, is essentially a flexible weighted AVS slashing mechanism. So we all understand what slashing is, which is essentially you're withholding withdrawal credentials by putting up your BNB, right? So when it comes to having flexibility in for example, your withdrawal time limits, your percentage of slashed, how much security you want as an AVS, all of these are basically massive hurdles that have yet to be answered right now, because no AVS project really is, I wouldn't say live, but really flourishing to the potential of what shared security is really offering. And of course, the most important thing is if you're not an investor or you're not a builder and caring about shared security, you're really focused on the point system. So especially our point system, this is just the token economics, but our point system is extremely robust. And to add on to that, we already have 100 million in TVL commits. And we're working with really large partners in the space, whether it be Lista or we plan on integrating, for example, Lombard and different Bitcoin layer 2 protocols directly onto BNB, so attracting TVL directly onto BNB. But really, one of the things I wanted to mention was, since we are supporting a majority of these BEP20 assets on our point system, we have to protect against depegging, right? And nobody else really has to worry about that. No other shared security platform has to worry about that, but we do, because we are supporting a lot of these meme coins, a lot of these, for example, wrapped Ethereum that could depeg at any time. So we're actually pricing it all on a really extensive Merkle tree directly onto BNB. So we're offering really integrated and expansive epochs right now for early contributors to TVL. But yeah, that is it. We are actually just past our first audit. So we will be launching on the 20th, where people could start depositing for select private beta users or select private users. But please reach out to us. Of course, the team, just a rock star stellar team. We got Walter, we got Vess, and me. I'm not too shabby. We all come from extensive crypto backgrounds, whether it be working on TON or working on ERC20 asset and blockchains, variety of them, being a developer house, or even myself, which I've advised over 30 companies in the blockchain space. 3 of them acquired by Coinbase, 2 of them acquired by Binance. So yeah, thank you. And you can look up more about us at binomial.fi. Thank you. Any questions?
Hello. So how does your integration with Lombard work? Do you create like wrap version of like BEP20 asset?
Exactly. So whether it be a wrapped version or an onboarded, essentially LRT or an LST version of it, that's the easiest way to integrate with them.
But what's the trust assumptions in bridging it?
The trust assumptions in bridging. So it would be in a shared vault, or a smart contract vault, and that's how we're going to be issuing a burn and mint mechanism.
Controls it? Is it a multi-sig or?
Sorry, say that again.
Who controls the vault? Is it a multi-sig?
The vault. So it is a multi-sig, but we're also a DAO governance. So it will eventually go to a DAO with a shared sequencer, with a decentralized prover. So that's how it really operates.
Got it. And I guess there's a bit of a macro question rather than specific to binomial, right? Because if you look at the likes of Eigenlayer or Babylon or like all the other copycats on other chains as well, right? It's like, it's it's not immediately obvious there's a very strong demand, for AVS and economic security in general.
Yeah.
And even if there is demand, right, it's not again immediately obvious like how much cost are people willing to pay, for those economic security and collateral. So I guess like from your point of view, like why it makes sense to build, what you guys are building on BNB Chain, and how do you see that unfolding in the future?
Yeah, again, from a like 100-foot view, a very macro perspective, having a BNB DA is absolutely critical. Having a BNB based shared sequencer, absolutely critical, and that's the infrastructure that we're really bringing in order to build the next, large DeFi applications on BNB. We do plan on also launching an incubator system or incubator platform directly on Binomial as well, because again, shared security and these ABSs. I mean, ABSs is another term. I always get asked that question. ABS, like why are you using the term ABS? It's basically because billion-dollar companies have already done the marketing for me, but it's essentially an app chain, right? And these app chains that don't need gas in order to charge in-kind tokens. So I think that answers your question a little bit. I think shared security and having this entire infrastructure is going to fuel the next large DeFi applications on BNB. Excellent. Thank you.
Thank you, Binomial. Now let's welcome our last pitching project before our DeFi panel. Welcome.
Hello. Hello. Okay.
Hello.
This is Wilson. We are building Paimon, the next generation RWA all-in-one marketplace. So today's RWA is almost all about US Treasury. 45%. It is good, but it's just having US Treasury is boring. And more importantly, we think 4 to 5% yield is not sustainable in the long-term future, because Fed is entering its new rate cutting cycle. So in a year, the risk-free rate will be dropping from 5.3% to only 2.8%, and further to 2.5% in the long run. So that is a huge cut. Under this scenario, only US Treasury is not good enough. We want to have the WA world more assets with high yield, low risks, and more options. So our team are all seasoned professionals from Wall Street. We understand there are a lot of assets out there that can be brought to the crypto world. There's corporate finance, there's corporate bond, there's consumer finance, corporate bonds, private equity, real estate, and all these assets have a higher yield than US Treasury, and because of their complexity, some of them are not so user-friendly and even unavailable to average retail users. That's why we think the permissionless tech of crypto can be a bigger value add here. So part 2 is not only about more assets, it's also about more DeFi applications. It is because we have a wider range of assets with different yield, different risk, and different liquidity. We can build a lot of more interesting DeFi applications based on them. We can create an on-chain liquid market for those assets which are not so liquid off-chain. We can build an AI engine to optimize portfolio for the customers based on their specific needs for risk, return, and liquidity. We'll also be building a notional token, interest token model where the return of the RW asset will be decomposed to the low risk, low return principal part and the high risk, high return yield part. So investors with different risk appetite can find what they need, and it will create a lot of interesting DeFi applications, just like what Pando did. Our product will be deeply integrated with BNB Chain for its massive user base, its low cost, and its great liquidity. And our product, with this growth, will also help BNB Chain grow its RWA ecosystem. So part 3, it's also about building a more compliant product. We will have a SEC licensed US investment advisor, and we will be working with the most reputed service providers in financial industry to ensure that our product is a compliant product with Wall Street standard. So with that all combined, I'll introduce you to our first product, which is ready to launch. It's a consumer finance product. So the underlying market of this is a 1.2 trillion market with average return ranging from 14 to 18%, much higher than the US Treasury yield. And this market is not so friendly to retail users because it has a high minimum investment amount and is rather complicated. But we can do it because our team member has a portfolio manager from PIMCO. PIMCO is the largest fixed income asset manager in the world with over $2 trillion under management. And he himself manages $80 billion consumer finance product there. And when we issue our new asset, we've been creating a new vote off-chain, and that vote will be controlling the deploy on-chain, which is responsible for minting and burning bond tokens. Investors can subscribe to our product at any time with fiat or stable coins, and it is redeemable on a quarterly basis with maximized 10% redeem value each quarter. And if the investors want to sell their tokens more quickly, they can also go to the on-chain permissionless AM pools, which is a secondary market for these tokens. And beyond that, the bond tokens can also be decomposed into notional token and interest token, as we discussed earlier, the high risk, high yield token and the low risk, low yield token. And the price of these two tokens will be determined by on-chain AM pools. These two AM pools will be incentivized by our tokens issued by our treasury. So that is only our first product from the consumer finance. Next, we'll be building the corporate bond, which is also a standard fixed income product. That is phase 1 of our project. Into phase 2 of our project, we'll be bringing more complex products, including real estate, PEVs, and public equity to the crypto space. So I hand over the time to my founder, Gu Yan, to share more information on the team side.
Thank you, Wilson. So we have assembled an all-star team of Wall Street veterans with total about like more than 6 decades of working experience. 4 of us was portfolio managers on Wall Street. Collectively, we have managed more than 100 billion assets. Take myself as an example. I launched my own hedge fund back in 2018 with a seeding capital from a multi-billion family office. It quickly became a huge success. We won all kinds of performance awards, like Tomorrow's Titan by Hedge Fund Journal, like Barclay Hedge. So today we are launching Project Payment, not from ground zero. We are leveraging our existing institutional level infrastructure for Project Payment. This is our team. Ray is head of HSBC asset management in US, brings in decades of deep relationships in institutional capital. Wilson is our expert in both DeFi and the traditional finance world. Leo is the portfolio manager at PIMCO. PIMCO is the largest fixed income asset manager on this planet. Leo brings in almost a decade of experience in consumer finance products. And Florin, who is a VP at Goldman Sachs, is our fintech guru. So, experience, pedigree, and a relationship, which translates into the business moat, which is the moat on the investor side and also the moat on the asset side. On the investor side, we have, take the consumer finance portfolio as an example, we have around 4 billion of capital is ready to be tokenized. On the asset side, because we have decades of relationship with the top-notch originators, the top deals in consumer finance is launched by those top originators. We can plug in and play in a couple of weeks, compared to someone who start from scratch will take years to onboard those originators. Consumer finance is just a start for us. Our vision is to democratize the access to top-notch Wall Street products, not only consumer finance, private credit, private equity, hedge fund, venture capital, to ordinary investors on the chain. We are leading a revolution. It will be great if you, all of you, and the BNB can be part of that. Thank you.
Yeah, happy to take any questions.
Yeah, I have a question. So considering you mentioned you're gonna have a over 12% to 18% yield, so you definitely manage a bunch of different portfolios altogether. So I just want to know who gonna be your targeted users, which regions, and also what kind of the users you're gonna mainly focus on from the beginning.
Oh yeah, maybe I'll take this question. So I think that the first step will be targeting institutional investor to bootstrap the liquidity and credibility of our portal. So already have some institutional clients who are interested in tokenize their already invested consumer finance product. But after we build some liquidity and credibility in the DeFi, we'll be also targeting consumer users if they are asking for higher yield, because we have this principal token and interest token mechanism, they will also get a even higher yield, like 20–40% yield. So to answer your question, first step would be more institutional side, but from institutional side, we expand to more consumers.
And for the region side, because considering the regulation and compliance issues, which regions of users you're gonna mainly focus on?
Yeah, there are multi-layer of the compliance. We take compliance very seriously. So for consumer finance product as an example, you need to be accredited investor, qualified purchaser, and a qualified buyer to buy those assets. So MilesGR Capital, that's my hedge fund, is qualified as all of these. And we are putting the LP interest of the fund on the chain. And we also want to go extra mile to be compliant. We learned from Ondo's model, we learned from OpenEden's model. We want our investors to pass the AML and the KYC to make sure we are fully compliant.
Okay, thank you.
I have a question. So, like, is it like permissionless in launching asset, with you guys, or is it like a whitelisting process?
You mean launching like a new fund or?
Hey, let's say I have a consumer finance asset, right?
Yeah.
That I've originated. Am I allowed to deploy on your platform, or?
We cannot allow that for the first stage, but in the long run, if we can build a complete process, we definitely need to check the compliance requirement for the manager who onboard the assets. But in the short term, we'll be the one who issue the new asset. In the long run, we'll build a system which we can screen and verify the compliance requirement of these external managers who onboard their assets. So that is maybe the second step in the future.
Got it. So the reason why I'm quite wary is because if you look at what, say, like MAS from Singapore has been doing, or Canton Chain, like a lot of it is, really like glorified enterprise chain, right? Because like the way the asset is registered is basically like a data warehouse, essentially. The way that it's being used in the blockchain, rather than issuing like native asset on the chain. So I'm not sure if you follow my question here.
Yeah, can you repeat the last part again? It's noisy out there.
No problem. So I guess like we've seen a lot of examples in the past, like Monetary Authority of Singapore or Canton Chain, or even like what JP Morgan is doing. Like the way they're using the blockchain is really in a very permission way, right? They see it as more of a data warehouse or like an enterprise chain, rather than like a permissionless blockchain where people are able to launch an asset freely, right? So just want to see what's your view on this, and
I think what we're doing is pretty similar to what Ondo Finance, OpenEden are doing. So basically, investors can use blockchain to invest their on-chain assets into this product. So that is the bridge between the real world and on-chain world. But of course, they have to go through some KYC process in order to be able to invest in it. So I would say it's not definitely the perfect situation, but what we do is similar to what Ondo and OpenEden has already done. And because they're only doing a small subset of assets, and we want to expand that business model to a much wider range of assets.
Do we have any other questions? Gumi.
In terms of the corporate bond and the private equity next year, wondering like who are the committed partners to the product?
Yeah, so we are doing two tracks. One track is for alternative assets, which are illiquid, like consumer finance, private equity, hedge fund, and the other track is for the liquid asset like corporate bond, public equity. So for corporate consumer finance, our committed partners is like PINCO, HSBC, and my fund and Cambridge Information Group. And for the corporate bond, it's our second product. We have been talking with multiple partners at this point. And also, but for private equity and the venture capital, we have multiple family offices. It's already very interested. They are already investing in those assets. Like Wilson has mentioned, they can get additional yield through the airdrop.
Thank you so much. And
thank you, guys.
Yeah,
thank you.
This is all for our session 1. We're about to have our session 2, and in between, we are going to have a DeFi panel. So let me shout out for all of our distinguished panel judges. Thank you, Joanna from IDG Capital. Thank you, Melody from Spartan Group. Thank you, Sarah from BNB Chain, and Nicola from Binance Labs. It's so good to see we have 4 females today as our judges. And also, thank you for Adrian from Animoca Brand. Thank you, Rajiv from Framework. Thank you, Figo from IOSG. And thank you, Gumi Evans from Gumi. And thank you, GM from Dragonfly. Thank you all. And we are going to have our DeFi panel right now before we have our session 2 of Peaches. And then we will have the gala party. And please collect the scores from our judges. And let's welcome our panelists for the DeFi panel. Lisa Dao, Lorena, Brad from Venus, Matt from Lorenzo, Ryan from Soul Protocol, and Lily from D11.
Hello.
Thank you, everyone. And before we start, I would like to invite our pitch session 2 judges to sit at the front. Come to the front. Thank you. Thank you, everyone. I'm going to give it a minute. If we can put on some music, and then we're going to start. And this, I would like to ask you to give me some silence for our panelists. Thank you so much. So the title of this panel is DeFi Innovation Dilemma, which means we are going to the next stage of DeFi after the DeFi craze in 2021, because we're seeing the stalled in. So we want to know, like, we are at the dilemma right now and what's going to happen next. So Vitalik said, decentralized finance feels like an Ouroboros. And Ouroboros is like the game we used to play when we were kids, like the snake. They can bite their tails. So, which means it's a zero-sum game. When crypto yields are earned from trading crypto tokens, which means the trading activities. And he critiqued on unsustainable DeFi practices, such as the 2021 liquid staking farming craze, which he viewed as temporary and lacking in long-term viability. So what do you think are sustainable DeFi practices, and how could builders achieve them?
Sure, I'll kick that off. So sustainable DeFi practices are about building business models. There's been a little bit of an identity crisis in crypto. there were millions and millions of users that were onboarded, and tons of people around the world that have been led to believe that crypto is only about trading and speculation. But in fact, crypto is really about building the next global open access financial infrastructure. And within that, there are business models that have yet to be unlocked, which is why so many startups are here pitching. And within those business models, some will be viable and will create revenue. And that revenue will be passed on to the farmers, to the strategists, the stakers, the people that are doing borrowing, the people that are doing DeFi strategies. And that's where a lot of the activity belongs, right? Is in, okay, proving out the DeFi Legos, not strictly in trading. And that's why I've been so excited about Venus for the past 3.5 years is we're doing record-breaking revenue. We do 10 to 20,000 monthly active users a month come onto the platform. And there's still tons of room to grow. So DeFi, for me, DeFi is what crypto is really about more than trading.
So DeFi is more than trading, and we need to bring. That comes to my next question. I fully agree with you, but the next question is like, where are the true yields come from, right? Yeah. So before we start the next question to dive in, anyone wants to add on to the first question?
Yeah, sure. So I'm going to announce something. So I think like for the real yields, it's not only comes from the trading, also because you can see that now DeFi has some good integration with RWA, so it can also make the RWA, make the traditional trade finance accessible to more user base, because previously it was only accessible for the institutions and also maybe the big traders or the big investors. But right now, with the RWA integration, it can also be accessible to the retail users. They can just buy with the USDC. So I think it also opens up. Has bridged the gap between the TradFi and the DeFi. So I think this is also something that DeFi has contributed to and bring the real yield to the general public and the general users. And in the meantime, as Brad mentioned, so like the borrowing and also the liquid staking, restaking, I think this is also some business model that's very sustainable, because you build something like for example, for borrowing, some people, they provide their assets as a collateral, and so you provide them, you give them some, incentives. But you can, some users that need this kind of the assets have this demand, they can borrow it with a higher yield. So there will be like the difference of the interest rate, which can also be sustainable and also can, to benefit for the both of them, and also for the liquid staking and also the restaking. I think it's also something very, can help the DeFi legal and the DeFi integration, the ecosystem, like to build more in a more, I'd say, sustainable and also a long-term way, because there can be a whole eco to build on top of it. Here we can say like Eigenlayer brings the restaking and the AVAs and also operators, everything on top of it. As long as the security has been ensured, I think this is also something that can bring the real yield to the users. Yeah.
Thank you. So I agree with you that if we want to have another level of DeFi craze, we need to bring more assets that need to be funded. So we need RWA. And any other panelist wants to add on, for example, what kind of RWA can bring real yields, or any add-on to this question?
Many real-world assets, especially financial assets, for example, US Treasury, they have real yields. So when you do something in crypto, you can just follow US Treasury as the back assets, and then their interest can be settled maybe by some very special way towards the real world, and then you can do this kind of things. So I think US Treasury, and also maybe options, maybe interest rate, foreign exchange, this kind of financial assets are very good to be RWA assets in the maybe next several years, maybe just next year.
I have a quick question. So is it, so for when follow US traders, is it like existing, like is it already like people can follow them even if they are, for example, because we already see like US bond, those type of US like RWA type. Yeah.
Of course, I think now many team from Web3, they're trying to do something like US bond, but not enough. That's very, very slight percentage of the US bond. You know, bond is something like lending and borrowing assets, something like the largest assets, financial assets in the world. But how much they come into the crypto? Very limited. So we think maybe there are many new ways to deal with this kind of RWA asset, and we can separate something like the interest and to do some maybe derivatives to make people can have fun and can make people also earn real money from the real world. Yeah.
Thank you. Thank you, Lily. I guess if we come, that all means we come to the core. If we come to the core of finance, so what is the goal of finance? Is to make it more efficient, to have money to be sent to where it's needed. Yeah. However, if passive activities like staking, liquid farming are providing good profits, is the DeFi system actually eventually encouraging people to become less active in participating in proactive trading activities?
I think yes. So a lot of things like the previous thing, like the questions before, we were saying like all of the yields are coming from like trading activities. But the problem is like I think it makes sense that that you are making profits by providing liquidity to the trading activities is because finance is essentially like a service, right? So you're providing service to whoever exchanging medias of values, and you are providing a service to them, and you are receiving revenues or like some sort of like economical rents from that. So that makes sense. But after you getting that, if you think like, okay, staking is the best way for me to keep like staying wealthy, and you don't like put this like capitals actually into circulation, instead you lock it up into like staking and hoping for like this is the highest yield of products on the market, essentially more and more of the capitals are actually removed from circulation and put it into like an idle state, and just counting on the like the inflation of these tokens is going to give you the highest yield. So I don't think like in the long run it's going to work. So eventually we want to have like more assets being brought on chain and creating more trading or arbitraging opportunities, and like more financial services being added on blockchain as well. So we encourage like more assets should be put into more active circulation and less being like used for staking. So that's kind of the how do we have like a more positive cycles on blockchain DeFi?
Yeah, I think, firstly, I agree with what like Matt just said. So I think like there are two things in like in DeFi. One is asset, the other one is financial service. So like when we talk about staking, do you think it's a kind of like service, a financial service, or is it kind of like assets? Actually, I would prefer to deem it as a assets. So when there are more kind of staking yields come out, it seems there are more and more staking related assets or staking yield bearing assets come out. That's a good thing, because we need to talk about the second part, which is a financial service, such as like lending. That's what like Venus is doing a good job in this sector. So, and also like Lisa DAO. So I think for Lisa DAO and Venus, as a financial service kind of provider, we need more assets. So when the staking come out, then there will more assets come out. Then the financial service provider can have more assets to kind of to serve. So I think that's a kind of two things here. I think in this cycle, I think the biggest challenge is on the assets end instead of like the financial service end, because like the assets is so limited. Just like what you discussed before, like RWA is really matter because we need to bring more assets into the space, and then the same infrastructure could serve a much more higher volume of the assets. Then we can like generate more kind of protocol revenue as a very solid business model. So yeah, so that's my opinion.
Thank you, Ryan. And audience, be quiet. I have a question for you guys. Be quiet. Hey. Yeah, be quiet. Thank you for the whip. I have a question for you guys. Yeah, so who is participating in liquid staking or liquid risk staking? Raise your hand, please. Yeah, I'm seeing a lot. So next questions is about your risk. If you want to lose your money, so you want to focus, you want to be quiet and listen to my next question. So there are many LSTs and RRTs today. So how do you think about the risk inside staking and restaking sector? Is multi-layer wrapper confusing to users? Because you are seeing a lot of multi-layer yield on, for example, Pendle. They're like having a lot of calculations. And do you think you are safe? Are there risks? Who would like to answer this question?
Well, so we have to remember that restaking is a form of rehypothecation, which played a role in the 2008 global financial crisis. And what that means is, for us, is that when you do restaking, you're taking on another dimension of risk that's embedded into that asset, right? Because you have to trust another level of counterparties, not just the node that it's being staked into, but the intermediary, which could be the orchestration layer or the AVS, which is being offered the capital that you've been staking for. So there are risks, and right, like LRTs, restaking have been the biggest narrative in the history of crypto. That's on the supply side, right? It's been an incredible supply side story, but on the demand side, nothing really has materialized yet. And so the risk is, well, you're allocating your capital to something that really hasn't generated revenue, sustainable revenue for it yet, but we're all here because we believe it will. Whether it actually does and how much it actually does, we still have to concretely see, right? But we see enormous promise in it, and we hope that this is something that will unlock an entirely new opportunity space, because essentially it's the cloudification of blockchain. It's doing for blockchain and decentralized services what AWS did for the internet. That's a big story.
Thank you, Brad. Anyone wants to add on this before I go further? Okay, Matt.
Yeah, I think like so every more layers of like staking or restaking is actually essentially adding more risks. So there is like one other protocol, I forgot its name, but it's like living on Pendle, and that protocol got hacked, caused a lot of the underlying Pendle users are facing like very severe loss as well. So so like our product's designs, it's like we're trying to like bundle like more like functions into one single layer on the same trust assumptions. It's like just like safer for the users, because otherwise, like in many cases, you can actually stack up like your staking for like 5, 6, or 7, even more times. But like either layers of these like protocols got either hacked or rugged, or there's like anything wrong goes that. So all of these like the whole stacks of the system got collapsed. So. And also, like even like it got like very confusing, because like in the ETH restaking age, because like you can stake your ETH and like EigenLayer and then Renzo, and from Renzo there's some like more restaking protocols. So I'm like hearing a lot of my friends complaining that it's easy to stake into them, but when you want to unstake, you pretty much like after like 3 months, you pretty much forget where did you actually deploy your ETH to. So just for your like sanities and also for security's sake. So probably you don't want to like stake to more than like 3 to 4 stacks of like restaking.
Thank you. Anyone wants to add on before I go further? Okay, so my question right now would be, so we have several layers. For example, we have 5, 6 layers. We stake, restake, and then we need to make sure every layer is safe so we can get our original BTC or Ethereum or anything. But the yields they are providing, are they real yield or just their own incentive tokens? So if they're only their own incentive tokens, so now it comes to my next question. When do you think the next DeFi craze will come?
I mean, for me, it's real yield. People will eventually develop points fatigue. And then from points fatigue, we're going to have points burnout. Everyone's going to, kind of get a little tired of points, I think, and chasing airdrops, and realize that, well, I want sustainable yield. Where does sustainable yield really come from? It comes from value creation. What is value creation? It's really revenue. And how can I access that? That's part of the promise that the restaking story brings. It's not here yet, but real yield is inevitably a part of that. It's a component of it. And every narrative, every sector in Web3 has the opportunity to deliver revenue to users in some form or another. That's what I think it will be the next craze, and of course, solving for all the complexity that comes with using DeFi.
Thank you, Brad. I want to know, like, are you kind of disappointed about the DeFi, the LSTs, the yields we have right now?
Good question.
Everybody, are you kind of disappointed because like we're not yet seeing those real yields that is like astonishing?
Yeah, I can take this question. So actually, I'm not disappointed. Actually, I'm quite bullish on LST and also LRTs, especially on BNB Chain. Why?
Thank you.
Yeah, because we are building the BNB LSD5, we are the leading LSD5 project built on the BNB Chain. So we have seen the potential, strong potential, and the whole picture of it. So right now there is BTC5 and also like the Ethereum restaking, but we believe that we are building some BNB5. Why? Because I think it's the ultimate restaking and the liquid staking of the BNB chain because we can combine the CFI and the DeFi. So how should we do it? So first of all, because you may know that BNB can be used for balance participation of the balance launch pool and balance mega drop or holders airdrop or everything. It can bring like 30% of the APR for the users that deposit or stake the BNB with the launch pool on the central exchange. But if we, have a little bit imagination, if we bring that kind of yield to an on-chain, to the DeFi ecosystem on the BNB chain, so that will be huge because every DeFi integration with BNB, with our Smith BNB, and also in the future with the BNB staking, it will automatically bring 30% of the annual yield. So I mean, it will be definitely much more competitive compared to Eigenlayer, Symbiotic, or CAC, or what other, no matter what, the restaking players on the other chains. And also, I think it's also good, it's something very good for the sustainable growth of the restaking ecosystem on the BNB chain, because first of all, the AVAs will have to, they don't need to, they have maybe less opportunity cost to pay for the security that is supplied for them. So they have higher motivation and to build on the BNB and to increase the security and also to increase the adoption of the BNB and also to co-build the whole ecosystem. So which will also make the BNB DeFi integration and the BNB grow in a more aggressive way. And then in the meantime, and with the restaking and more, maybe it will also with the attractive yield, maybe there will be more institutions or TradFis or like the wares from Ethereum or from BTC or from like the traditional CFIs, also traditional TradFis, they will just come to the BNB chain. So I can say there will be strong potential for the BNB5, and especially because recently we've just launched the BNB.xyz. So there is a platform that BNB Chain, ListDAO, and also PancakeSwap and Supendo will be the first co-contributor. So we all work together to build a BNB5 and to also witness PancakeSwap, Tranches, and also Pendo and also TrustWallet will be the first batch of the partners. So we all will work together, to push for the BNB adoption and also push for the growth of the BNB5. And we leverage the centralized change yield of the 30% to the BNB chain users, to the BNB chain DeFi communities. So I definitely believe that we have the same belief that the BNB5 will be the next wave of the DeFi.
Thank you so much, Lorena. Thank you for shouting out for us. And if I didn't understand it wrong, it would be like even if you put your BNB at your exchange, you can still restake it. To not only get the launchpad, but also restake. This is an innovation because nobody have ever done that before because no yields of BNB on decentralized exchange on DeFi can be higher than a launchpad I think. Yeah. So this is the first time. Thank you for shouting out for us. And as I've mentioned, BTC5, I'm gonna go further on this. So is there gonna be any fundamental difference between Ethereum DeFi and BTC5, I mean EVM DeFi? So do you think BTC5 is going to challenge or synergize between EVM chains?
There are of course some difference between BTC5 and EVM DeFi. First the technology basic is quite different. So the infra of the BTC is quite slower than the infra in Ethereum. So if you want to do something like DeFi on Bitcoin, maybe today they cannot support. They can do very limited protocols. But on the other way, BTC has a very wide speed customers. They are the most consensus around the world. So, of course, BTC have most customers and almost 50% of the total market value of the crypto. But Ethereum only 11%. So if you want to earn more money, attract more attention, maybe you can try from the Bitcoin, but first pay attention to their infrastructure firstly. And to be honest, I think the most important difference, there's no difference between these two. Although we have mentioned a lot. Why? The DeFi, what called DeFi, that's a financial service. So even in Bitcoin, Ethereum, Solana, Intel, in any public chain, you want to accomplish a financial service to your customer. So what's the most important thing? Your product, your unique business model, your customer, their demand. So even if something like today I develop Ethereum DeFi, but I cannot attract enough customer, when I move it to Bitcoin, will the customer come here? No. So I think the real difference, no.
I have to say I partially agree with you because I think there's a real difference between Bitcoin and EVM chains because EVM chains, they're POS. So as long as you stake Ethereum, you're going to get Ethereum yield. But Bitcoin is different. If you just stake, there's no extra, they're not printing extra Bitcoins to give it to you because it's POW. So Bitcoin holders, if they want to get more Bitcoin, they have to trade. And when they trade, there's a chance they will lose their Bitcoin. So money will flow. So
on the other point, Ethereum, they have the staking revenue. But you can look at the growth of the Ethereum price and the growth of the Bitcoin price. People have one Bitcoin, but people have maybe more Ethereum. The Bitcoin price grew much more than Ethereum this year, almost in the past 10 years. That's the truth. So staking also pays cost. We get more Ethereum, but Ethereum is cheaper. So what's the meaning of staking?
I wonder. So Matt, as a BTC Fi, Lorenzo, would you like to add on something?
Yeah, I'm trying to consolidate the points of your views. I think on the longer terms, I think Ethereum's price is still going up, in a sense. Yeah, but the only thing is because there is inflation, so it's kind of diluted of the yield a bit as well. And plus, I mean, Ethereum currently is in a lot of serious troubles, facing its own challenging of its own L2s. So so Ethereum is kind of in some of the troubles, and also Vitalik personally probably also in some troubles as well. So but I think the idea is that basically we want to a world we want to see is the wealth can always have a reallocation. So we have a redistribution. So if you want to make more contributions, you're supposed to gaining more wealth. And if you're staying idle, because of inflation. The invention of inflation is that if you don't actively do something to grow your wealth, you're actually losing your wealth slowly. So I think BTC makes more sense is because you at least you're not actively growing the numbers of your wealth on the paper. But for Ethereum, you can't actually passively don't do anything and get some passive yields. I think that's pretty much it. Yeah.
Thank you, Matt, from Lorenzo. And Ryan, as another BTC Fi, what's your thought?
Oh yes. Yeah, from my perspective, I think BTC Fi is more like an asset instead of a financial service. So I don't think there's competition between BTC Fi and Ethereum DeFi, because we can see more and more BTC assets being being brought to BNB Chain, say Venus, Lisa DAO, and also some other the Changes, all those of the BNB kind of the DeFi infrastructure. So how to define it? It's so-called BTC Fi, right? So it seems that there's a combination, which is BTC Fi is more focused on activate the idle BTC assets and bring all those of the BTC assets to the whole DeFi ecosystem to allow all the financial service could really serve all those of the BTC assets. So that's so-called BTC-Fi. So I don't think like BTC-Fi is something that really needs to be built based on like the BTC mainnet. It's all about like the how to really bring the assets to to the financial service kind of infrastructure.
Yes, so that comes to our topic again, back to RWA, right? Because we want to bring more assets. Now let's talk about something fun. So let's talk about meme. How about? So Pump Fund made a whopping $3.4 million in 7 days, right? And remarked as one of the most profitable projects in the DeFi world. So what do you think is the value of meme, and what is driving the meme fever? Who would like to start?
I just see memes as a user acquisition vehicle for retail and for expanding crypto. And I mean, it's been so potent. That's what's driving the business of Pump.Fun. Right now you have like 50 Pump.Fun forks. Yeah, the narrative has been Fork.Fun. So Fork.Fun has been driving some adoption on other chains. You have a lot of Pump.Fun derivatives, but it just goes to show that memes are something that go beyond crypto. There were memes before crypto, and that's why memes have been such a potent user acquisition vehicle. They're not going anywhere. They're going to stick around. And everybody on the stage probably has discussed meme coins at some point. Everybody in the audience has discussed memes at some point because we love them. We've loved them before. We were sending memes before they were crypto. So they'll continue, and they'll hopefully drive more adoption.
Thank you, Brad. Yeah.
Yeah, okay. I also understand something. So I think, like Brad said, I totally agree that meme coin is some good way for the user acquisition and also for the retail user or for the Web2 user to onboard. Because, for example, like some famous IP, for example, Simon's Cat, and also I know that Trump, also something, like the Pontifex meme coin, actually they can onboard a lot of the Web2 users. For example, the supporters of Donald Trump or the supporters or the fans of Simon's Cat to participate in the trading of the meme coin. So this will onboard, maybe increase user base and the adoption of the whole Web3 industry. On the second hand, also I think the meme coin with the traction they have, there can also be some interesting, the DeFi integration. Because for example, on the BNB chain, we also have like the sponsor Y is like one of the, I think it's one of the biggest meme coin on the BNB chain with the traction. So I think they also have some, some innovative integration, for example, with some restaking with Binomial, and also we also have some collaboration with them in the future. And also with actually on the BNB chain, there's also something like similar to Pump Fund, but named as Meme. So they are also like doing the, one-click platform for non-chain meme coin, and also they can leverage for example our Sneeze BNB and also Cake and Y like to launch the new meme token. So it actually can add the more utilities to the DeFi tokens or to other the VC tokens or the tokens with basic value. So I can say, so in my opinion, I think meme coin is not just something, shit coins. Actually, they can also bring some value and also some volume and also some user base, strong user base to the DeFi world and also to the whole Web3 industry. So in general, I think it's still something good, and it's still there are a lot of synergies that we can explore, like to co-work together.
Thank you, Brad and Lorena. I think as a conclusion, that would be meme coin brings the user acquisition and mass adoption. Besides, I want to add on something. I think it's also about attention business. Yeah, which means like people know that eventually, if there's no other buyers, like new users coming from outside the industry, it's going to be a Ponzi. It's going to be a zero-sum game. However, meme is like the attention. People won't last more than 2 months. So it's going to be here, there, it's flowing. And when it's flowing, the money is flowing too. So it makes people feel like, oh, I got a chance to buy the next 100 times memes. So I think that's also about attention business. Anyone wants to add on to this?
I think meme reflects the desire or the demand of crypto players, especially common crypto players, to become rich. So this is kind of culture. So their desire, you can design this kind of meme to attract more people. So maybe sometimes it's something like gambling, but people would like to add more mass adoption, add more meaning to that. Yeah.
Thank you. How about you two, LSTs?
Yeah, I think I agree. So, because like meme is so random, so it's based on like how like the market's perception onto this. So it can go like very ridiculously high in the price in a very short period of time. So that makes like people excited, makes like some people rich. So basically, it encourage like more circulation of capitals. Because the next time, because like when like the one meme, like tension moving from one meme to another, which encourages like more capitals, like also moving from one meme to another as well. So I think in overall, like meme is like a game model which encourages some more capital circulation, and so it's like good for DeFi in general. I agree with that.
Let me keep it short. So I think like I love and respect the meme culture in crypto, but I think like the point here is that it's obviously that it's quite effective to bring like more new users to the crypto through meme, but I don't think it's really a sustainable and a long-term the best way to attract new users, because we can see there are more and more Web2 kind of the applications that try to integrate with like crypto. So I think that's the best way, because there are like billions of the users or like 100 millions of the dollars, not dollars actually, the users could be brought to crypto very easily through just integrate with those of like the crypto infrastructure with the Web2 application, just like Telegram. So I think Telegram really bring a lot of users to the crypto. So I personally more kind of bullish on all those Web2 application, kind of the combined with all the crypto. Yeah.
Yeah, I agree with you, but it's really rely on the social media itself, because to build social, it costs like 10 years. And then the social can build back to like payments and the coins, like tokens. But it costs like 10 years to build social. So for example, like if X wants to have a token, it's going to be huge. But there's a lot of legal issues behind. And now it brings back to RWA again. So my last question is also open to our audience. So if anyone think you have really good insight, feel free to raise your hand. It's my last question. So when more RWA and anti-censorship applications are brought to DeFi, how can we better enforce ethical behavior and financial stability on chain?
I can start first. So first of all, I think like the traditional finance is not the enemy of blockchain. So even that's like TradFi is one of like the best tools. Like TradFi offers, and also the like compliances and regulations offers some of the best tools for you to secure the on-chain economy, right? So first of all, so there are a lot of like financial like toolings, for example, like Moody like social credits, for example, some like banking insurances and things like that. So if you want to build like a bridge connecting, like say like you want to build like settlement and clearing systems, so you want to like building like bank reserve backed kind of some on-chain tokens as well. So these like TradFi toolings would be your best friends for you to building the bridge connecting like off-chain and on-chain world. This is one. And also two, so we want to like bring more assets on-chain, but we do not want to encourage like criminal behaviors on-chain as well. So a lot of like the fundamental like compliance rules, I think still like is relevant. Let's say like AML, let's say KYC, KYB, like DDQ, like these kinds of like things are still relevant. So we want to create like a more liquid market. We want to create a more borderless kind of finance ecosystem on chain. But still, I think fundamentally we're still living in a real world, right? So being smart, using some of the TradFi toolings and the regulatory toolings to protect you and create a more borderless and also liquid finance ecosystem on top of that would be like the best combination. That's what I think.
Thank you. And what about Ryan?
Yeah, I think like in terms of the RWA kind of related topics, because I want to share more about like the BTC plus RWA's kind of topic from my perspective, because we can see like there are more and more BTC ETF just came out, and also the volume is growing so rapidly. So as we can see, like there's still I think like the hurdle between the TradFi and the crypto finance it's become more and more kind of lower for most of the participants. So as we can see, Fidelity and also Franklin Templeton, they just try to like tokenize their BTC ETF into the crypto space. So I think to like really allow them to bring all those of the Bitcoin ETF into the DeFi kind of infrastructure and really utilize them to provide financial service would be a very interesting topic for us.
Thank you. And I'd like to wrap up the panel if there's no one from the audience wants to add on to my final question. Okay.
Yeah, so what I want to talk about, like, I mean, in the censorship, that's what I always try to think about, because if we talk about how can we limit bad behavior, but who is deciding what is good and what is bad? And the reason why I believe the reason why we're in DeFi is not like we're not trying to against the traditional financial system, but clearly we're at war, and everybody's a warrior. And because we've been we've been, kind of ripped out by the centralized financial ecosystem, and every single person in this room is a free man. We're free. We're living in the land of the free. That's why we're human. Now we're not even better than the animals. They're more free than us. And I think we're not only trying to against the traditional system. We're trying to build a better future for our kids, we're trying to build equality for others. And when they say certain things is bad and certain things is good, I think, who gives certain people the power to decide what is good and what is bad? And, every single person should be the judge of if you do some activities and there's going to be consequences. And that should be judged by the by the people, not by a few people, not by a few lawmakers. That's why we're here, and that's why when we talk about anti-censorship, I think that's very important, and that's why exactly the reason why we're here at the first place.
Thank you. And I'm going to wrap up the panel right now. So it seems like if we want to see another craze of DeFi after 2021, we do need to bring in more RWAs. And for more RWA, it's not like RWA is fully anti-censorship. There's a spectrum in between. So it's like we're trying to do some probably on-chain KYC another way that if you are off-chain, if you are non-US traders, probably you couldn't do it, but on-chain, we still want to do some KYC as long as we know who you are, and then you will still be able to get those assets. So we go to the core of finance, which is we're not really encouraging like a one-time click of staking and earn yields. We're actually encouraging money to flow faster, so we have more proactive trading activities. And we're looking forward to those LSCs to bring us new, amazing RWAs. Thank you. And thank you, everyone. I'd like to welcome our next session 2 judges. Yeah, we have Lily from D11 Labs, who were just on my panel, and Sarah from BNB Chain, Nicola from Binance Labs, Dr. David N from Jarkun Ventures, Nihal from Pantera, my old friend Eric from Nomad Capital. Where's Eric? And Eugene from DWF, Yemu from Penrose, Zixi from Matrix Partner, and Ken from the president of Harvard Blockchain. Welcome our judges. Let's get started. What's the first? Let's welcome Stream, our first pitching project of session 2, up on the stage.
Hi, everyone. Judges, yeah, it's great to be here. My name's Jonah. I'm one of the co-founders of Stream, and this is Milton, my co-founder. So we're very excited here to share with you guys a little bit more about Stream, one of the projects that we've been building over the past couple of months. What is Stream? Stream is a new universal layer powering the future of content and engagement. And what we aim to do is create a new way for creators to truly interact in novel, interesting, exciting ways with their audiences. So Stream sits at the intersection of quite a few different content verticals, totaling over $1 trillion in market size, right? So what we aim to do is really position ourselves uniquely to tap into this massive market in live streaming. So when it comes to the problems that we're trying to tackle, one of the key issues that we are trying to solve is that genuine engagement is actually very difficult to actually quantify right now, especially in Web3. And what we are trying to do is create a way for audiences, brands, and advertisers to really understand how genuine engagement is being formed. And we aim to build the tools to allow creators to do that effectively. Now, the flywheel for us is very simple, right? So what we're aiming to do is to onboard audience members, onboard retail users through the onboarding of creators. And what we aim to do along the way, right, is to create this flywheel by using different incentives, different crypto rewards along the way to retain these users. Now, what makes Stream different? What we're building is a user-centric product, and what we're trying to do is we're trying to build features and products that truly drive value for creators and their audiences. And how we see it, right, is to be able to build really fun, genuinely exciting experiences for creators and their audiences is key to this. Because ultimately, this is what's going to drive retention. This is what's going to drive continued engagement. And we're being led right now by industry veterans, both across Web 2 and Web 3, to realize this vision. So what is Stream? This is really the key to it. This is the meat of the presentation here. Stream is actually a Chrome extension on desktop, as well as a progressive web app for both Web 2 and Web 3 audiences. So the key here is easy onboarding. It's effortless to install and use. We're onboarding the top creators, and ultimately what we want to do is create a discovery and aggregation platform for all of the different Web 2 as well as Web 3 creators for easy and intuitive understanding by the audiences. Right, so of course, we're also going to be gamifying this entire experience where both creators as well as audiences, right, will have a clear leaderboard where they're climbing the leaderboard and incentivized through a gamification. So one of the first use cases that we've developed, right, is an overlay on top of X Spaces. Now, Spaces before Stream was just a one-way street. Engagement, it was difficult to tell for the creators whether audiences were truly engaged. And it's just really, you don't capture the same vibes as like in a live audience right now, where as someone presenting, I actually get to feel the vibe in the room, right? Whereas like on a live stream as a creator, it's very difficult to get that. So what we're doing with Stream is we're giving X Spaces a superpower. So what you're seeing here is actually a live demo of the product in action. Is it playing? No. Okay. Well, what you're I guess the video is not playing, but what you're supposed to see is actually a natively injected experience into the X Space itself. And what you will see in the actual live experience is an actual mini game that pops up on top. So what creators are able to do as they're hosting their spaces, right, is to actually engage with their audience through these experiences. So I'm just gonna kind of cycle through because I know we're running a little bit short on time, but the results so far after a couple of weeks of private beta have been extremely encouraging. Our creators have been giving us a ton of super valuable feedback, and we've been incorporating all of that. And we're going to be rolling out more and more experiences that will be overlaid on top of all of the streams that we're putting out. So we work with some of the best creator clusters across both Web3 and Web2. So I think a special call out here would be Talon, one of our key partners and one of the leading esports teams in the space, spanning millions and millions of subscribers across multiple streaming platforms. And of course, right now our creator network in total spans over close to 50 million total subscribers and followers across all platforms. So Milton, over to you.
And I think beyond just the number, there are quite a few things that we want to highlight. One would be how geographically and in terms of language, how diverse our creator network is. I think that's one of the unique edge of Animoca being based in Hong Kong, able to connect both Asian communities, but also Western and English-speaking communities. So just quickly flipping through the roster of creators that we have onboarded so far that would actually use our product to reach a really large regular user base. So on Twitter, you have guys like Wolf, you have Pukas. On YouTube, you have Dura Family, guys that actually have multi-million followers that will actually use the product in their content. And also Twitch will be launching early October. So we have all these hardcore game streamers that are ready, locked and loaded and ready to launch. So again, it's great to be here to actually share what we have been building in stealth over the past few months. And immediately after Token2049 will be our full launch phase over a few weeks. So there are a number of campaigns and activations that we have already planned to hopefully create the maximum attention for our project. So for instance, we're going to start this daily creator hero unveiling. All these multi-million creator on YouTube. Again, they're creating contents on topics that are day-to-day videos that people actually would watch, right? Regular people, it's not Web3 natives. We also have a great advisory and advisory bot, including Yet, founder of Animoca, and Justin Khan, co-founder of Twitch, and a number of other creators that are really native to the Web3 and creator community.
Thank you. Sorry, the time is out.
Sorry, time is out.
Yeah. Any questions from our judges? Let's give the judge a minute to process to a lot of information. Any questions? Thank you, 你好.
Hear me? Hello, hello. Okay, perfect. Yeah, so there've been like a couple of iterations of a creator, like the role bit, and a huge problem basically is on the creator side is, will their audience basically, feel like they're selling out if they're doing anything related to Web3? I'm just curious how you've kind of sold your product specifically to these creators, and how have you got them comfortable with using something like this? Like, is the crypto completely abstracted from their users, or how are you basically kind of like selling this to creators?
Yeah, actually, that's a good question. So as alluded in earlier slides, right, we outlined, a few key components in creating a social product. I think the theory is straightforward, and, it's not alien to a lot of people, especially, all of you that are familiar with every concept. But in reality, the execution is super difficult. So we spend a lot of time in actually overcoming that trust factor in getting regular creators, mainstream creators to partner and work with a Web3 project. So obviously, the brand, the relationship helped a lot, but also the way we position our product is not asking these creators to show NFT or token day one to their users, right? What we're bringing them is actually a low friction, easy to use product that actually would just add a bit of fun interaction to their regular content that Web2 users, audience easily sign up with email, Twitter, And for them, it's just a simple interaction tool. But for those that actually are familiar with Web3, they can definitely go a layer deeper. And you have all these points. Obviously, potentially it might translate into airdrop and all that. But really, that's not the prerequisite of using it. So I think, again, we're not, I would say we're not creating something super creative in that sense, but really, I think the difficulty lies in execution when it comes to SocialFi product. And a big part that we're really keen and proud of would be through our esports team partner, which we, again, spend many, many weeks just sharing our product philosophy, what actually are expected from the creator. And we're absolutely clear that this is not about shilling this for 3 weeks. This is about actually bringing a product that they find useful and they would use over 1 to 2 year period or even longer. And that's why in our beta test, again, it's a page that got skipped through very quickly, but we keep asking for feedbacks from creators, and they are actually raising some very interesting stuff. For example, native giveaways through these minigame overlay on Twitter Spaces, that if you're actually playing these minigames during Twitter Spaces, that's actually a pretty good proof that you're organic or likely a real human, right? And then they can actually give items, perks away in that way, which again will go into our roadmap. So sorry, but yeah, long version of what you just asked. Yeah.
Thank you. Thank you, Stream. And let's welcome our next project, Open Social. Thank you, Stream.
Hey guys, this is Open Social, and I'm Sean. I'm partner at EVG Everest Ventures, and I'm also co-founder of Open Social. So we have we have like reputable investor like Frameworks, Portal VC, and also North Island Ventures. So what we do is we are building blocks for community dApps, which means like we are a Shopify. So user can come to Open Social portal and create their SocialFi app in 5 minutes. So this is what we do actually. So there are 2 things. So one, like we put every social graph on chain. So everyone will have their on-chain social identity and also on-chain community. And also we are building social modules and plugins. So these are like front-end stuffs. So it's like chat, feed. So we combine all of these together. That's why we create apps so fast. So our mission is very easy. We build product for ordinary people. This is from a feedback from a Farcaster user. It's fun, right? So I use Farcaster and Open Social. I think Open Social is much more for ordinary people. So we are building product that even my mom can use it. So we heavily integrated like account abstraction wallet. So my mom can log in through her Gmail and get her first wallet, get her first airdrop, and like she doesn't need to we subsidize all gas fees, so she doesn't need to experience like all the Web3 stuff. So it's basically census, and we launched around like May this year, and our first app is actually on Base. So right now we are the largest social app on Base. We have 150K DAUs already, and we are generating 8% of transactions daily on Base Chain. And so we integrated everything, and we proved that social product can actually earn revenue as well. So yeah, this is our comparison. So this is the landscape of all social protocols so far, and Open Social flipped all of our competitors in merely 2 months, because we launched it around June 19th. So right now we got around 250K on-chain users, and we got 7 million on-chain transactions, and everything is organic and it's done in 2 months. And among these 7 million transactions, 70% till 80% is actually from social graph. So people likes to follow people on chain. So our feedback is that, why it took so long to follow one people on chain? They don't know it's an on-chain activity actually. They just feel that, the latency it's been long. So it's pretty interesting. And right now we have like 4,000 on-chain communities from different regions. 70% of our users are APEC users in Korea, Greater China, Southeast Asia, and they're creating communities based on their own languages. And November, all of these on-chain community builders can upgrade their on-chain communities to their own on-chain community dApp. So basically, I can create a dApp for all the judges here in 5 minutes. That's what we're doing right now. So this is a demographic. So you can see that, oh, we got like 70% of the users are actually from Asia. And so on our GA, our user session is 30 minutes. And I don't know like why the fuck they stay in our app for such a long time, but it's very interesting. We have paying users. So right now, around like 5% of users are paying inside our app. Like we got like 150K revenue last month. So we kind of like proved that, oh, people actually are willing to spend inside a social protocol, inside a social application. So this is what we do right now. So we are cooperating. We are a multi-chain protocol. We are cooperating with different chains. So Base will be our first one, and BNB Chain will be our second one. And also we'll have one called Deek, and it's on Barra Chain. So we'll have flagship dApp to drive DAU, tractions, revenue, and also we'll have an open social portal, which is for everyone to come to our portal to create their SocialFi app in 5 minutes. And this is our community dApp, and we'll launch at November. And we're going to launch our app on BNB Chain tomorrow. So when BNB team come to us, probably like last month, right? So we build app very fast. And we're going to integrate heavily into BNB Chain, OP BNB ecosystem, Greenfield, and BNB attestation. And it's the hottest and freshest Web3 social app on BNB Chain. So it's a very cute one. So we built the whole app in a month. Yeah, and it will launch tomorrow. Hopefully everyone can come and play. And we're going to integrate a lot of projects from BNB Chain. So we're looking forward to cooperate with like all the projects here today. Yeah, and we're getting pretty viral. So we have a pretty huge community on this already. So yeah, so I'm Sean, co-founder of Open Social. I'm also partner at EVG. Thank you. Yeah.
Thank you, Sean. Thank you, Open Social. Do we have any questions from our judges? Yeah, more from Penrose.
First of all, congrats, Sean, on achieving as the top social app on Base, which is not an easy thing to do. Can you maybe explain to me what is the main driver between such fantastic result exceeding forecasters?
Yeah, so I think forecasters are designed for degens. So if you like are a first-time user to forecaster, you need to pay $5 to them, right? So, but for Open Social, like all the applications inside Open Social, you merely need to like log in through Twitter or Gmail, and we'll subsidize you $1. We will subsidize $1 for every new users, and
$1 in the form of stablecoin or your own.
$1 for gas credit.
Gas credit.
Yeah. So the login progress is like that. So after they log in through like all the Web2 socials, and we'll create on-chain profile for them and recommend KOLs to follow, communities to join, and all of these are senseless. User won't feel that, oh, it's actually a Web3 activity. So I think that's one of the reasons we can grow so fast. So like after like all of these, they will get their first Web3 wallet. So I think the next step for us is that we help a lot of people in Southeast Asia to have their first crypto wallet, and even my mom. My mom is my user now. And I think the next thing is that I want to integrate on and off ramp inside our account abstraction, especially for Southeast Asia and all around the region. I think that's the next step to increase our revenue and also our pay rate.
Got it. I might have missed it, but how many registered users there are right now?
So right now, the total registered user is not that much. It's 250K, but our DAUs is 150K.
So every new signups, you subsidize $1 worth of gas credit for
Yeah,
each
so
account.
so for every $1 gas fee we subsidize, we will earn $7 back.
Got it. Okay.
So it's like 1 to 7 ratio.
Amazing.
It's a good, it's a healthy.
It's a good
healthy
ROI.
rate,
Yes.
yeah, yeah.
What is the main source of the 150K revenue last month?
So actually we break down into, so we have like 5 different revenue streams. So one is user will pay a lot on membership. And also we have one special feature called Megaphone. It's like Google AdSense. People pay that for attention. And we also gamify it. They can also get points. So so if they pay for Megaphone, they will get a lot of followers and they will get a lot of people who join their community. And a lot of airdrop hunter actually use this Megaphone to get attention because there are a lot of people sharing referral codes right now, right? So like we got a couple revenues. I can share with you later. It's a fun one. Yeah.
Thank you.
Thank you, Sean from Open Social. Any other questions from our judges? And okay, and one more.
Can you express a little bit what the problem is you're solving for the normie who is potentially happy with what he or she has in Web2 social media? So I am struggling a little bit with what problem are you really solving?
I think it's cool to have your own app. That's something Web2 never solved. So if you are on Twitter, you'll never have your own wallet, right? Like all of the rest of the projects we see, they're like, integrating, and you need to like download something and to get a wallet. We don't need that, right? The wallet is embedded there. And you can create your own community app. I think that's something very cool, right? And you can actually showcase on your phone and say that, this is my stuff. And my followers just come and join my community app. I think this is something very cool. Yeah. And you have never seen it before, like the Shopify model for Web3 social.
Thank you. Thank you, Sean from Open Social. And let's welcome our next pitching project, ShareX.
Okay, thank you.
Hello, everyone. My name is Fu. I'm very happy to share with you all our project today called ShareX, a sharing ecosystem in Web3. We aim to build a decentralized sharing economy infrastructure by fostering the trust, the value of transparency, trust, and efficiency. So we'll start with power bank sharing. There are 2 reasons why we start with power bank sharing. Is because power bank sharing economy grows rapidly in overseas, especially this year. And we believe in the huge potential of this economy. Next, we have a deep expertise in this field because our team, our founder, Timothy, who is the CMO and co-founder of Lighten Technology, which is the first company to offer power bank sharing in China. In 2017, I brought this power bank sharing economy to Singapore. And in 2019, we expanded our business to Japan, Malaysia, and Thailand. Within 5 years, we hold a top 3 market share in Japan and Malaysia. Up to date, we have accumulated more than 500,000 of registered users, 4,000 of merchants, and hundreds of thousands of power banks circulated in the market. We also do provide hardware and software solutions to hundreds of clients globally, especially in Russia, US, and some countries in the Europe. With all the offline locations, thousands of merchants, hundreds, thousands of millions of users, and thousands of power banks that we have, we believe we can leverage all this in ShareX easily. That's the core in our Web 2. Next, let's talk about the core in Web 3. We have this D-Share protocol. We are building this D-Share protocol that support various types of IoT devices. First, we start with power banks. I believe everyone are using power banks. So in future, we can onboard more and more of different types of IoT device. Example, EV scooter, EV chargers, vending machines, drones, and even mining machines. ShareX, we have the DShare protocol offer 3 main capabilities and tools. The first one will be ShareX chips and IoT SDK. Next will be our on-chain revenue settlements, and next will be our RWA and incentive mechanism. We have designed a very straightforward mechanism that allow user to understand and use our services. We map each of our power bank in real life to a on-chain RWA. So users who purchase and own the RWA are essentially binding themselves to a physical power banks in real life. So they are able to earn a share of the real life profit and along with the incentive provided by Web3. So let's say I'm from Singapore. I want to buy an RWA in Russia, so I'm able to earn the revenue generating in Russia. So we also design an incentive mechanism to maximize our efficiency called X-Point. X-Points use proof of service mechanism to reward user behavior. So the basic incentive include charge to earn. User able to earn some X-Point using our services. Next, what can we bring to BNB Chain? We plan to deeply integrate in BNB Chain by deploy our DShare protocol on BNB Chain. Every transaction will be recorded on chain and all the profit distribution will be on chain easily. Our RWA and incentive asset will be issued, airdrop, and circulated in BNB Chain. We are in talk with Binance Pay. In future, user might able to pay our services using Binance Wallet. On the user entry side, we are able to convert our current 500,000 of users into Web3 easily by pushing them a register link, sign up link in our apps, which we can do it in Q4. So user able to get a free usage of our services if they completed the task like sign up as a Binance user or deposit some fiat into it. We also can design a city promotion plan that we can wrap all our machines and power bank in a standardized UI that given by Binance. Let's talk about some of the roadmap. So in Q3, we plan to complete our MVP validation and complete our first round of funding. In Q4, we are planning to launch our product, our RWA, and convert our existing users to Web3. Last but not least, let me do a recap for the key advantages in our projects. First, DShare protocol, which is the service provider platform for all the IoT devices. Second, we have a closed loop businesses that are generating a good revenue and we have a product ready. Next, we have a large Web2 user that can be easily converted to Web3. Last but not least, we have an experienced team of Web2 and Web3 that survived through pandemic and bear market. Thank you very much and welcome your question.
Thank you, ShareX. Do we have any questions from our judges?
Hey, I'm very curious. So, what's the yield that people can get from a power bank specifically? Like, do you guys have any projections specifically on like what I could possibly get if I were to, get share in one power bank in Russia or something like that?
So actually, we do a profit sharing with everyone. So like, let's say we rented per hour is $1 per day, maximum is $5. So 20% or 30% of it will goes to the RWA owner. Depends on location. Some location like entertainment places, we are able to charge them $10 per day. Yeah. So we do a profit sharing with the users and the RWA owner.
And so are these power banks basically built already and then I buy into a power bank like?
Yes.
And so like, because who's basically building these power banks later
Yes,
and
correct.
whatnot?
So actually, we already have the product ready, and we have our demo set behind the D11 booth that all of you can run using BNB Chain, using MetaMask wallet through BNB Chain. So we already have more than 1 million of these power banks circulated worldwide. Then we will onboard them and map into our RWA on-chain.
So can I see like the history of the power banks of like how much money or revenue specifically a specific power bank is generating, or how does that marketplace work basically?
By just a fact that in this year itself, we sold 250,000 of power banks to Russia to our clients, and the profit margin maybe okay, in real life maybe we sell this for $10. Yeah, but in Web3 we are planning to sell for like 0.1 BNB, which is equivalent to $50 right now. Yeah.
What's your target market and how to start? For the cold start.
Actually, our target market is the whole world, Southeast Asia, and we can onboard different competitors on board, different types of IoT device. And we can start with Southeast Asia, which right now we already covered Singapore, Malaysia, Thailand, Japan, and Vietnam, and also our partners in Indonesia. So within Southeast Asia itself, I think it's a good market for us to launch this, because every single country of this already have the power bank players in the market. So right now we only need to build the D-Share protocol, which is a service platform for other to come in.
One question on regulation. Can you elaborate a little bit on whether you have done some sort of due diligence with regard to certain geos where that token, if it accrues value, it's like a dividend that you pay out to token holders?
You mean the X point?
No, if you have an RWA token which is dividend bearing, that might be considered a security in some jurisdictions. Have you done due diligence on different geos?
No. Okay. For this, we haven't. It's a very good question. So our team is doing the due diligence too, and for sure we will abide to the laws and regulations, in comply with all the laws and regulations in all the country. Then we only will open up the RWA on-chain purchase for that country users. Any more questions?
I have one more question. Yep. How do you ensure the data that is collected off-chain and then uploaded on-chain? How do you ensure that off-chain component is not it's not played with and it's actually a true data?
That's why we need our ShareX chips. Yeah, because right now the off-chain data that can be edited. So right now we deploy our chain, our protocol, our system on chain. So nobody can edit or change the value, the data of it.
So people have to trust ShareX as a company, have to trust your chips.
Yep.
Would that be the central point of trust point that is, eventually still not decentralized? What do you think about that?
It's a very good question, and we will discuss about it later, because this is too technical and I'm not a technical person.
Thank you, ShareX.
All right, thank you everyone.
Yeah.
Thank you.
Let's welcome Kasu to the stage.
Check, check, check. Ladies and gentlemen, and esteemed judges. Tokenizing debt is a $1 trillion opportunity, but lending is risky. And the fact is that when you're depositing your funds through most RWA platforms, you don't actually know where your money goes. It generally goes into a black box, and there's a lot of lack of transparency in that. There's also inherent risk here as well, as proven by the fact that over the last couple of years, the 3 top RWA platforms have lost $90 million. This is significant. And the fact is, as I said before, that you really don't know where your money's going. Let me give you a couple of examples. One of our leading competitors that calls themselves RWA, that everyone would know here, and I won't name them, their leading pool is actually buying Solana and staking it. All funds stay on chain. Another leading competitor, which is actually real RWA, they are basically funding high-risk enterprises in Latin America, in Southeast Asia, and in Sub-Saharan Africa. And their senior pool was hit for $5 million earlier this year because they lent funds to a taxi financing company in Kenya, which on-lent the money to their sister company in Uganda, and it's gone. And finally, another leading RWA platform just launched its latest pool, which is simply investing into DeFi with a small percentage going into low-yield US Treasury bonds. Hardly inspiring. Casu is a little different. We are more than just an RWA platform. We actually have unique proprietary IP, which allows us to fix the borrowing need before lending a dollar. So we are able to offer the most risk-optimized yields in all of private credit. Faculty Group and Apsium have formed a joint venture. Faculty Group is a leading Web3 venture studio with around 100 people in the team and deep expertise in DeFi. Apsium is a multi-award-winning Australian government grant recipient, fintech and software as a service provider based in Australia. National finalist, multiple grants, multiple award-winning, and deeply data integrated with two of the world's leading accounting system software management providers, Iris Global and Wolters Kluwer. They provide accounts receivable software management system for some of the leading accounting firms in the world across the US, the UK, Canada, and Australia. One of the clients of these firms has over $800 million of clients below them as well. So there's a significant amount of liquidity there. And what Apsium is able to do is actually utilize exclusive IP to fix the borrowing need before lending a dollar. And it does this by using by able to fix essentially 50% of the admin overheads and the admin overheads, and also the debtor days. Excuse me, my memory's a little hazy. It was a late night last night. So the debtor days, which means they're able to collect their funds far sooner, therefore de-risking the debtor book. So once that's done, then the money is lent. So we're lending to an optimized debtor book. This provides higher quality yields with superior risk management. And we're offering a base average APY of 14%. Our first three strategies, which have just launched, are offering between 15 and 20%, fully sustainable, fully uncorrelated with the crypto market, and very risk optimized. We're offering granular insight into how these funds are being spent. All of this data is being brought on chain. So rather than just the money going into a black box where you don't know what it is, you know exactly where your funds are going. This is a level of transparency that no one else in the RWA space is able to provide. And this is partly due to the fact that Apsium, our JV partner, is the payments rails provider for all of these accounting firms. All of the bills that are sent by these accounting firms to their clients are sent through Apsium. So we see every single invoice in real time, providing a level of granular detail that no one else can. This means we've had zero losses, no defaults in over 7 years of operation, which is pretty significant. The global invoice financing market is significant. I'd like to just draw your attention to the obtainable market. There is a $7.5 billion opportunity which exists within Apsium and Casu's existing client base without having to do any other further outreach through the integration with Wolters Kluwer and Iris Global. There is another significant innovation that we're bringing to market. Through COVID, there was a tax holiday provided by most of the leading tax authority departments around the world, in Australia, in America, and others as well. This holiday is now over, and many companies are required to pay back that tax debt, but they're giving very onerous terms to do that. We're able to fund some of these tax debt obligations and do so to help them smooth out this obligation that they have. There is real utility in the token. Essentially, you get a capital access and withdrawal priority. The more tokens you have locked, the faster access you have to your own funds, the better access you have to exclusive pools. There's also a fee sharing and yield bonuses attached to that as well. We have a highly experienced team, structured finance, DeFi, banking backgrounds going for many years. And we are currently using our old slide here. It should say, instead of built on base, we're able to onboard BNB
through KYC and onboard funds from BNB instantly and seamlessly as well. The mainnet is live. We launched in stealth about 2 months ago. We've seeded the liquidity with $3 million already. We've passed 2 major audits, one with Chain Security. We have 50 million in TVL soft commits over the next 6 months. And our public launch, where retail is able to access this as well, is at the end of this month, early next month, launching at a $15 million valuation. That is all. Thank you very much. Any questions?
Thank you, Kasu. I see you have your friends here shouting out for you, supporting for you. And any questions from our judges? Let's give the judges a minute to process.
I was talking a little quickly, covered a lot of information there. No?
Can you describe again the process of what you're essentially tokenizing at the end of the day? There's accounts receivable management, I get that. There's the partner who's basically collecting those accounts receivables from companies, but what exactly are you tokenizing here?
Okay, so Appium processes $2 billion worth of accounts receivables, invoice lending, well, not sorry, lending, but all the accounts receivables annually across those major markets that I mentioned. And what they do is they're basically providing a service to these accounting firms and handling all of the accounts receivable. Now, for example, if the accounting firm sends the client a bill for $20,000, they get an option. They pay the $20,000 today, or they pay $22,000 over the course of, say, 10 months. When they select option 2, Appium becomes a lender. They pay the accountant all the money on day one, and then they collect that debt from the client of the accounting firm. They collect all of the fees up front. So $2,000 in fees up front, $2,000 of the principal, and the remaining debt gets paid over 10 months. Where it gets interesting is if that company defaults after 3 months, let's say they can't pay their bill, the obligation for the funding there never actually left the accounting firm. The relationship is with the accounting firm. Because if they sold the debt to Appium, they would have to tell the client that they sold the debt, which for an accounting firm is a terrible look for optics. So what happens is Appium sends reminder notices, all fully automated, and after 10 days or 15 days, they then turn around to the accounting firm and say, your client has defaulted, and they simply take the remaining funds, let's say the 14,000 left, out of the accountant's cash receivables bank account, because they're the payments rails provider for the accounting firm. They withdraw the funds from the account, which means they got the $2,000 in fees up front, plus all of the rest of the money, and they're fully paid out in only 3 months instead of 10 months. So if the client defaults, they actually get a higher IRR into the 30 or 40% mark. Take it one step further. If the accounting firm doesn't have the funds in their bank account, then what Appium can simply do is reroute every other bill from every other client of the accounting firm to themselves until that $14,000 is paid down. So this would require the original person, the original client of the accounting firm to go broke, every other client of the accounting firm to go broke, and the accounting firm itself to go broke before Appium lost a cent, which means that's why for 7 years they haven't lost any money. So it's that lending which is being financed. No interest in RWA from the judges. That's a pity. It's a big sector, guys. You should pay attention. No.
Great presentation. I enjoyed this. So, beyond Axum, how do you exactly scale your business model? Obviously, Axum is a great partner. You have a lot of visibility. But how do you actually take this business global? It feels very Aussie related and just curious.
It's just my accent that's falling here. This is not just Australian. Like I said, the clients of Appium are global. They operate in the most regulated markets in the world. Their biggest clients are in the US, the UK, Canada, and Australia. So highly regulated. They've been operating there for some time and deeply data integrated with 2 of the leading accounting software providers in the world, Wolters Kluwer and Iris Global. Just so happens that it's an Australian-based business, but it's very globally facing. So in terms of scalability, the potential market is huge. The biggest issue we have right now is attracting TVL and liquidity to scale into that. So that's what we're on a mission to do right now. Like I mentioned, we have around 50 million in soft commits so far, but over time, this could scale quite significantly. Our first year forecasts are 125 million, and then from there on up. Thank you for your question. All right, I'll take that as we're done. Thank you very much.
Thank you, Kasu Finance. Thank you so much. And let's welcome Town Story on the stage.
At the beginning, I feel very nervous because probably I'm the only one in GameFi project during this session. So, but I watched the South Park page at Cassie presentation, so I relaxed a lot. We are a game studio called IFG, but Townstar Galaxy is our first project. And so I will introduce the game today. So first is about my land. So our game will provide island for our users and players. So we call these players residents, and they can build factories and invite NPCs and grow flowers and whatever you want. You can do on the island, and even invite corporations to settle. So that's very interesting. We want to make this game enough fun. So we also have an open world. So people can harvest their flowers and the plants in the island, and even they can set themselves to the space. So it's just like a very, how to say that, it's a mini metaverse in our game. So it's our core design. So we have farm and we have grow. So people can build their farmland and flowers field and the kitchen, even the kitchen and the hill house, to make their island more beautiful. And of course they can invite friends and get a party with their friends in this island and grow their network, relationship network. So our game is not only a GameFi; it's also a social fi. We can make new friends, and we can know a lot of friends in this island. Yeah, and we also should buy some NFTs to build their own town and the house. Of course, we can also have and earn token profits in this game. That's how we play to earn. And of course, we have also the inner revenue during this game. We are not traditional GameFi. We can earn money from this game. We have a really good cash flow and revenue from our alpha test and the beta test. So it's tested. And of course, we can also invite the characters and strengthen the management. So it makes this island more diversity. Yeah, and it's our economic model, and so the time is limited, so I don't have enough time to introduce about this. So we have the game token. It's used to consumption, like our token A, and we also have a governance token. You can purchase it from the exchanges and outside the game way. So we can just, and of course you can also play with the NPCs. It's totally different from the traditional GameFi and even the Web2 games. So that is why we can bring more Web2 players to our game. So that is our tokenomics and their roles, the token A and token B. So probably we'll list our token B in the future, probably, and even it's draws near. The token A is used to consumption, and it can bring us the revenue and the good cash flow. Yeah. Of course, that's our tokenomic now. So we will keep our supporters and players benefits during this round, and skip it. So I will introduce our team directly. So our team is from Zynga, a very famous NA's team studio, and they are all social game experts, and they build a lot of firmware. The monthly revenue is 100 million, and the Zynga Poker is a very famous Texas poker game, and Cityville, the monthly revenue hit to at least 10 million. So they get success in their traditional game industry, but now they want to bring this their tech and their talent to the Web3, and they can bring a lot of users to this this industry. Yeah. And we also have the 3 test phrase, and we want to build a complicated, complicated game studio. It include our Telegram use user plan and the game. So probably we will protect at least 10 more games in the future. So that's our data. So we have our test in linear. We have at least 1 million users, and we burn the gas at least $2 million in the linear. So we want to bring the success experience to the BNB. And we will choose BNB as the main account, and we choose BNB because the very good performance. So especially the low gas and the smooth gameplay. So we want to bring a better choice to our users. Yeah, and we will also make the assets to deploy on the BNB. Yeah. Okay, we skipped. So I'm sorry. Any questions?
Town Story. Thank you, Town Story. Any questions from our judges?
I have a question. You mentioned that this is a real revenue generating game. Can you share more about how the revenue being generated, and is there any previous data that can be shared after your main launch?
I'm sorry, I didn't.
You mentioned that this is a real revenue generating game, right? Compared with other GameFi products. Can you share more about that part? And if there's any previous data can be shared, that can be also great.
Yeah, we hold at least 5 more events during the last year. So and a lot of people buy our NFTs and to build their own town. So that is our positive revenue. So I think we will cope this to the the BNB chain, and because BNB chain have a lot of game players. So that is why we are so proud. We are so confident we can earn the positive revenue in the BNB.
So how many percentages of this revenue generated will be shared to the token holders in the future?
We tested at least 10, and because the gameplay time is really long, so we tested in the linear. So each person play this game is around 2 hours. So it's really long. So so they have a lot of chance to buy the NFT and assets.
I mean, how many percentages of the revenue generated will be finally shared to the token holders in the future?
It's decided. So
Okay.
yeah.
Sorry. What is your main user acquisition strategy, and how do you make sure that it is sustainable in the long run?
I'm sorry.
What is your main user acquisition strategy, and how do you make sure that it is sustainable in the long run?
Yeah, our strategy is very simple. So we are holding we are waiting for our Telegram group mini app. So we will launch it, and we have another project called the Tongjoy. So it can bring a lot of the real players to our game. So we have another team. So they are from the traditional user growth projects like the BitDance and Baidu International. So they have experience, and they can even to buy some real users. And these users are from NA, from the East Asia. So that's our plan. And of course, we have a lot of real users in linear. That's our history. Yeah.
What about the revenue percentage generated by NFT selling and the game itself?
You mean the revenue and the game itself?
I mean, what's the percentage of the revenue generated from NFT selling?
It's 30%. Yeah.
So
even in the future, probably it's the 100% because a lot of us should buy the NFTs to build their own town. But now it's 30%. Yeah, because we are just airdrop our the points, no token now. Yeah.
Thank you.
Okay.
Thank you, Town Story. And we only have 2 more projects left. One is Concrete Protocol. Welcome to the stage.
Hi, everyone. My name is Dylan, co-founder of Concrete. We are the DeFi liquidity meta layer. What does that mean? We build infrastructure to provide frictionless access to DeFi products for the casual and expert user. For users who want easy DeFi yields, you come to our vaults and access automated yield strategies. For those looking for a little more risk, we tokenize your yield deposits, and then you can then leverage them for loans, and we give you non-liquidatable leverage. At scale, we really see this as the foundation for asset-backed derivatives across all of crypto. We started the company about 18 months ago. We raised our seed round last year, led by Tribe Capital and Hashed. We're closing our Series A right now, led by Polychain Capital. We're working with Josh Rosenthal there. We have 420,000 verified wallet signups, all signed with on-chain transactions, and over 250 mil in TVL pre-commits. Team of TradFi and crypto natives. I was previously a VC for 4 years. Prior to that, I launched a consumer company that now does north of 30 million in revenue. My co-founder and CEO, Nick, we've worked together and known each other for over 8 years. He sold 3 companies and then most recently was at 0.72. Our chief architect, Harrison, comes from Faction, where he led crypto investing, and then prior to that, helped build the blockchain analytics team directly with Brian back at Coinbase. We really see ourselves as a multi-chain product, with BNB Chain being one of our core deployments. We're also working closely with Chain, Movement, Corn, and then a couple of key protocols on ETH mainnet. Our core products are Concrete Earn and Protect and Borrow. So Earn are automated yield vaults, and then Concrete Protect and Borrow is we issue automated credit facilities that you can use on any lending protocol. So we'll be integrated into the Morpho front end. We'll be their liquidation protection. And then you can also use us on things like Aave and Compound as well. For our Concrete Vaults, we run a variety of different strategies. We're building a leverage restaking strategy directly with Lombard. We're also working with a couple of protocols on Berachain, doing various leverage BGT, and then also doing kind of key partnerships on BNB as well. Like I said, we tokenize our yield. We tokenize our vault deposits. So you can really see this as a next-gen Yearn. So when you deposit into our vaults, we give you a concrete asset. You then can use that for various leverage and tokenize yields, all while having a yield-bearing asset. These receipt tokens can be used on various lending protocols for additional leverage. One of our key deployments, as I said, is BNB Chain. We're going live in Q4. We're building various strategies with LRTs like Puffer and then various BTC-Fi eco projects like Lorenzo and Solve. And then we're running strategies on various projects like Kinza, Radiant, and Venus. We'll provide liquidation protection on them and then also provide vaults for the various strategies. An example from the previous slide, but using more concrete examples on Binance. So for things like Puffer, we can give you CT assets, and then also for various STBTC on Lorenzo, yield-bearing CT asset, which can be used for all those utility, and then using a variety of different strategies for yield. We've also purchased a company earlier this year, so we're announcing that publicly in a few weeks, but we purchased Jet Protocol, which is a Solana company from from the last cycle. We're relaunching that as a money market and then building an LRT in deep partnership with Solaire. And then you can use us as the core DeFi hub for leverage against your various LRTs on Solana. In summary, we're bringing new DeFi infrastructure and derivatives here. We're working with various labs, infra L1s and L2s like Move and Corn, and then also working with things like Infrared on Bera. And then we're also relaunching Jet as Glow Finance and building an LRT with Solaire. And that's us.
Thank you, Concrete Protocol. Any questions from our judges? 你好。
Awesome. It sounds like there's been a lot of progress specifically, and you're in so many different types of chains. I'm just curious, like, what do you see as like the ideal user specifically, given like, you know, Berachain, Jet Protocol, and Solana? There's like very different type of communities that you're tapping into. Is there a specific profile that you've kind of seen since kind of the traction that kind of is, you know, what you're targeting specifically, and has that evolved specifically as building this product out?
Definitely. I think the way to actually look at it is we took a step back, and a lot of the partnerships have been driven top down from foundations. So we work closely with the labs and foundation teams for these various chains and really do the customer discovery through there. So for Bera, Smokey wanted to have various curated ecosystem vaults. So we work closely with them, kind of curate the top protocols there, and then give users aggregated yield access to all that. And then for things like Lombard, as they start their new chain deployments, we're building various strategies for the others. So in the same way they have the Veda vault on ETH mainnet, we're helping them build vaults for the different strategies. So that one, you can see it from the ecosystem perspective on Bera, and then for Lombard, it's kind of what needs do they have and what have they been getting from their stakers.
Like, how do you prioritize strategies just in general, like internally speaking? Is it mostly from the foundation? Is it like, the ecosystem itself? I'm just curious how that decision making gets done.
I think for us, it's ecosystems that we're incredibly excited about. So BNB, Bera, and then I think a lot of what we have done is really goes from the assets as well. So, as Lombard and working with Lorenzo and all these folks, prioritizing that. So it's kind of where do these flows seem to exist? But really for us, we can spin up instances of Concrete on any chain built for kind of the multi-chain deployment. Yeah.
Any other questions? Are you trying to raise your hand? No? Kent? Do you have you need a mic?
Yep. Thank you very much. So I would like to understand a little bit which markets are you looking to focus on first, and the go-to-market partners that you are working with, and the strategy in terms of the go-to-market.
Yeah, definitely. So initial deployments between BNB Chain and ETH mainnet. I think for BNB, it's a really exciting ecosystem with all the various DeFi, and then a lot of the new BTC-Fi protocols like Lorenzo, Lombard, and things launching on that. So really building in and around that, and then ETH mainnet as well for our core partnerships there, being Morpho, Lombard, and a couple other protocols that haven't been announced yet.
Thank you. David.
So I think in the beginning you said that you're also targeting beginners, or like I would say not degens, but not so crypto native people. Is that correct?
Yeah, I think the way that you can see the vaults is stratifying various different levels of risk appetite. So if you want to be a kind of average DeFi user, you can come to our vaults. We'd like to think we give you the best yields. Happy to follow up with more materials on some of our kind of early quantitative data, but give you the best yields for the one-click deposit on the vault. And then if you are a little bit more risk on or want to go more degen, that is the leverage we allow you by giving you margin on the tokenized deposits.
My question goes like, has the market for non-crypto native, non-degens growing in the past 18 months? And how do you see that product in, let's say, how do you see yourself in 10 years?
I think for the non-native, non-degen, I would say that there's definitely been more interest. I think it's definitely providing the most seamless experience and giving the best yields. In many ways, I think what Athena did for giving that one-click deposit really opened up a lot of the space. But the other thing too is I think as a lot of these new assets like staked on Babylon and things look for more yield just because there's no inherent yield, I think it gives a huge opportunity for infrastructure providers like us to be able to meet that demand.
Thank you.
Thank you.
Thank you, Concrete Protocol. And then now let's welcome our one last pitching project, IO Finance. And then I'm going to shout out to our judges. Thank you so much for your hard work.
Hi, everyone. I'm Kevin, CEO and co-founder for IO Finance. Yeah, so I'm the last one, so we're almost end up this day. So thank you for all judges stay so late. So for IO, we are the first Web3 supply chain payment finance network. So let me give you a little bit background. So before starting IO, me and my co-founder, Craig, we actually work at a supply chain fintech, and we developed a working capital management solution and integrated it with several financial holding companies in Taiwan to provide funds for our supply chain clients. But through the experience, we realized that traditional financiers are actually quite limited in cross-border scenario, and they were tied up with heavy operational burden and have to deal with such a fragmented system we have in Web 2. So we believe we could do it better in Web 3. And let me tell you a scaring fact. There's a 2.5 trillion gap in trade finance rejected requests globally every year. So I think this gap, we can touch into it and unlock a massive potential in supply chain. And we'll be able to scale in DeFi application and bring more real use cases onto the Web3. So what I was doing is just connecting liquidity from Web3 to Web2 supply chain through our buyer lead credit solution, as an end-to-end solution with global accessibility and instant settlement. So just think of it like a credit card. So buyer, they initiate a loan, upload their invoices to their supplier, and request a loan. Then IO can directly pay to their supplier. So for supplier, they can receive instant cash flow, and for buyer, they just pay a majority. So that's what we are doing. And on the other hand, we also aim to push Web3 beyond speculative crypto money gain. So with IO, you can actually achieve consistent and sustainable risk adjustment yields, and regardless of crypto market condition, because your investment are backed by real-world economic activities. So what makes us so different? We actually tailor our architecture for supply chain payment. We uniquely integrate supplier and buyer on-chain to enhance asset authenticity, but also help them to facilitate credit accumulation for real-world enterprise. Unlike other RWA financing protocol or lending protocol, they tend to be general. They create a pool to a fintech borrower and then do the borrowing and lending off-chain. There's a big black box there, and if you can see the metrics, there's around 3% to 5% total loss rate for our competitor, and that's not the RWA, or I think there's still a long way to go for private credit protocol. So we believe the low-hanging fruit will be supply chain finance. So through focusing on the receivable from the same buyer, we will be able to achieve competitive yields around 10 to 15%, but also remain such a low total loss rate. So our go-to-market strategy is to establish fintech as our pool admin to quickly onboard their existing asset provider. So let me cite an example. BSOS is our first pool admin partnership. They already process invoice from more than 300 corporates and have monthly demand for around 15 million. And they got investor from Taiwan's government funds and industry side. They have Pegatron, one of the largest Apple product manufacturer. And throughout the integration,
for suppliers, they can see all their invoice in the dashboard and select the invoice they want to receive early payment for and the discount rate they're willing to offer. Then they can enable the stablecoin payment method and set the wallet address. Finally,
basically, supplier
send the
can
request to the given
click
buyer.
the invoice they want to receive early payment.
For the buyer side,
The
they
buyer
review
can see
early
the
payment
request.
requests from their supplier, and if they are unable to fulfill the
They
payment
can
due to
accept
the lack of
themselves
cash
or directly
prefer to
transfer
maintain their
to
cash reserves,
alternative financer
they can
like
transfer
IO.
the request to an alternative financer like IO. The buyer only needs to sign with their private key to verify.
So basically, what we are doing is just connect our system, use a fintech in the front and DeFi in the back approach. So traditional clients can actually access Web3 liquidity with just few clicks and use the tool they already use for years. So that's our approach. And for our liquidity provider profile, we aim to access liquidity first through high net worth individual crypto reach at the initial stage. As we gradually build out our credibility, then we'll be able to onboard more DAO and DeFi treasury like Morpho, Arbitron, and Athena. They're also looking into diverse their portfolio, diverse their position into more RWA-backed yield. And lastly, we'll be able to onboard institutional option investor like asset manager and family office. So our revenue model is quite straightforward. We take 5 to 10% commission on the total interest we pay. So that's say total market 1% of market share, like from the seller and buyer side solution, 3.5 trillion, and we take 1%, it will be 35 billion. And let's assume 10% average APR for the pool and 10% commission. It will end up result 350 million revenue annually. So here's our strategic partner. We are just graduate from Outlier Ventures Adobe Basecamp, and we will deploy on Binance, BNB Chain, and Plum from day one. And team-wise, I personally come from a software engineer background, and we have Craig. We met in the fintech company we used to work with, and Ethan. He have more than 17 years TradFi background and specialized in institutional sale in Merrill Lynch, Deutsche Bank, and Sogin. And turns from Google, Andrew from Red Bull. So roadmap-wise, we just finalized our audit and we'll be expect to launch in late September. And yeah, that's it. We'll bring our 2 POC cases in October. So if you are interested in exploring synergy between Adobe, PayFi, and supply chain, connect with me today, and let's shape the future of finance together. Thank you.
Wait. Hello? Yeah. I have a okay, yeah, I have a quick question for that. Yeah, because this seems supply chain finance is very workable in the Web 2. Yeah, but I don't know why this thing is in crypto in Web 3. Because if you perceive the Web 2 enterprise to use the crypto payment is a very difficult thing. Yeah, they can do in Web 2 in bank transfer, but why besides the payment, why crypto? Yeah, thank you.
So basically, what we are target is through we are aimed to have a payment financing solution. So let's say a Nike supplier, maybe Vietnam shoes factory, they sell their shoes to Nike. Nike still have to distribute the goods and sell their shoes to end user, and they'll be collect the money back and pay to their supplier. So there's a natural of payment timing gap. So that's where supply chain finance comes in to help. And throughout the aisle, we can actually pay through the supplier first, and that buyer just paid us in maybe 60 days or 90 days. So that's actually what we're trying to do to help them bridge the payment timing gap.
Actually, the same thing can be done in Web 2, and the cost of the Web 3 interest are quite high. So and why? So what will you use for? What your token will be used for?
For tokenomics?
Yes.
Yeah, so for tokenomic wise, because it's just like a credit card business model. So whenever buyer use IELTS, we will distribute more IELTS token as incentive. So whenever they use IELTS again, like use credit card, they will have a bonus point. So I would just think of IELTS as a bonus point. So whenever they use, they still have to pay the transaction fee, and IELTS can utilize it just like a BNB token in Binance. They can have some discounts. So it's utility base wise.
Thanks. So if I'm understanding correctly, right, the line of credit, so to speak, is determined after the borrower uploads the receipt, right, to your system, right? How do you
Exactly.
combat the fraud issues that lies or underlines the process?
Yes, exactly. So that's the key point. So whenever buyer on board, we'll ask them to provide their financial status and all the like cash flow, cash history, and forecasting. And that's where we set up a credit limit. And once they upload their invoices, pool admin, the local fintech partner, also the pool curator, they will decide to accept it or not. So whenever they accept it, we will directly pay to them. And if unfortunately default cases happen, we set up a SPV to request to collect the money back through off-chain legal process. So that's just how Adobe protocol do when default cases happen, and we will set up a SPV for each buyer to have more protection there to all the investor.
Any other questions? I guess that's it. Thank you, Al Finance. And
Thank
I'm
you.
going to shout out for all our judges. Thank you, Nicola from Binance Labs. Thank you, Zixi from Matrix, and Eric from Nomad Capital, Lily from D11, Nihao from Pantera, Yemu from Penrose, David from Jerkun Venture, and Eugene from DWF, Sarah from BNB Chain, and Kent from Stanford blockchain. And one more thing, as our audience or community of the project, you are able to actually vote for your favorite projects. Find more details on BNB Chain official Twitter X. Okay, and food is running out. Catering is just outside. Go find your food. Thank you, everyone. Have a good day. Oh, and we will announce the winners hopefully this week in a few days. And all of the judges, please hand in your scores to us.